Hindalco continues to remain under pressure in the large cap space with the Novelis IPO getting pushed forward. And yesterday there were gains in a Hero MotoCorp, for instance, on expectation that the rural, there will be that rural recovery. Money will be given to households. So spending will pick up in two-wheelers. But Hero MotoCorp is one of the big losers. HUL is seeing profit booking. Nestle, Divi's Laboratories, Sun Pharma, Britannia, defensives are on the back foot. With that, it's a wrap on trading hour from the entire team. Thank you for watching.
Two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18 embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Stocks gain on expectations of continuity in policy, and we have decent gains despite coalition compulsions. PSUs lead the charge besides utilities and realty as well as capital goods. FMCG, the weak link.
BHAL bags 2 orders aggregating to over 7,000 crores. RVNL also clocks a new order win, and NBCC snaps up orders of just under 500 crores. The wins and ND's expected return fuel optimism on capex.
Titan has started selling sunglasses via quick commerce and is all set to sell prescription eyewear online as well. The management tells CNBC TV18 it's confident of turning EBIT positive in all emerging businesses by end FY27.
Murugappa Group's Vilayan Subaya tells CNBC TV18 he is confident of CG Power's bet on e-mobility and plans to launch a 3-wheeler, a truck and a tractor. He's also building a chip assembly and testing unit in Gujarat and plans a foray into appliances with CG Power.
Nvidia becomes the second most valuable company after Microsoft and ahead of Apple after its market cap tops $3 trillion. This even as regulators are likely to start antitrust probes into roles of Microsoft, OpenAI and Nvidia in the AI industry.
Hello and welcome to the CNBC-TV18 HDFC Sky election headquarters. I'm Ekta Batra and with me is Mangalam Malu. Well, it is the second straight day of gains, so no complaints coming in at this point in time. And if you look at it, we've rallied all the way from the intraday low on Monday, which stood at around 21,281 or thereabout, all the way to levels of around 22,800 today. So just about, we've come off those levels, but it's around a 1,500 plus point recovery that we've seen if you just chart the dots and chart the journey of the Nifty intraday low on Monday up till now. So good going for the markets. Midcap index is up around 2%, no complaints coming in, and a strong advanced decline ratio as well, Mangalam.
Absolutely, Ekta. You know, you said 1,500 points from the lows on Tuesday that we hit on the Nifty itself. From there, we've seen a big rally. But even if you do not take into account Monday or Tuesday or Wednesday, the first exit poll rally and then the big decline and thereafter some recovery yesterday, even if you adjust for all of that and believe that the markets were shut for the last 3 days and you hung around through all the volatility, you're still up 200 points from Friday's close on the market. So that's telling you that we are doing extremely well. So there you have it. You know, the last 7 days, the Nifty is just down about 0.7%, but from Friday's close, it's actually up about 200 points. And even as we're off the highs of today, like you pointed out as well, you know, important to see where we go in the second half of trade. The mid-cap index is doing extremely well. We have nearly 10 stocks advancing for every stock which is declining in the broader markets. 2,100 stocks on the NSE higher. And we are seeing some return or some sort of buying from lower levels in a lot of these PSU names as well. BHEL, for instance, up 12%. Though, mind you, it's still down 4% for the week. So whether this sustains or is this just a dead cat bounce that we're seeing in all these PSU names is something that we'll focus on.
Yes, absolutely. And my mistake, I meant Tuesday's lows. Obviously, Monday was the day where we had the exit poll reaction, and then Tuesday was a reality check which came through. But nonetheless, like you mentioned, you know, on a week-to-date basis, there are some stocks which have done well. So let's see. It seems as though it'll probably sustain, and topping the list is HUL within the Nifty space, which has already gained around 9% week to date, accounting for today's losses as well, and even something like a Hero Moto, which is up around 7.6% on a week-to-date basis. So these are a couple of stocks to keep on your radar. Let's kick off the show by talking about some stocks in news. IEX is surging in trade after posting what was a strong business update for the month of May. Vivek is here with the details on that. Vivek.
Well, that's right. You know, the company yesterday evening went ahead and reported the May monthly operational performance. When you're talking about the monthly total volumes, it came in over 10,633 million units, which was a gain of almost 29% on a year-on-year basis. So very strong volume activity. The core electricity volumes went up by almost 21% on a year-on-year basis. The day-ahead market price came in at 5.3 rupees a unit, which the company says is almost a 20% discount to the kind of pricing that is seen in bilateral contracts between both the power producer as well as the DISCOM. So they believe that it is much better for power producers as well as buyers to come onto the exchange. Now they're saying going ahead, they see increased sell-side liquidity from sale of surplus unrequisitioned power on power exchanges. They also expect to see increased fuel supply, and also higher availability of generating units is something that is expected to aid the sell-side liquidity going forward.
All right, that's about IEX doing extremely well in today's trading session in line with all the other exchanges, all the other PSUs as well. But Vivek, hang in there because there are a lot of PSUs which are buzzing on the back of news as well. We have BHEL, NBCC, some order wins. So fundamentals, not a problem so far.
Well, you're right. You know, when you're talking about these PSUs, order wins is what keeping them very, very active. BHEL, you know, we've been saying it time and again that the order book, especially over the last 2 years, has been increasing quite significantly. Yesterday, again, two very significant orders coming in for BHEL. So the first order is from Uttar Pradesh. In the state of Uttar Pradesh, the company will be supplying equipment. Now, this particular equipment is for a 2 into 800 megawatt. That is almost 1600 megawatt of a power plant that is being set up. The company will be supplying boilers, turbines as well as generators, and the total size of this particular order is over 3,500 crore. Now the second order is in the state of Chhattisgarh. Again, the scope of work is similar. The company would be supplying equipment as well as the EPC works. Order size again over 3,500 crore. When you're talking about the total order size that the company has received, from these two orders, over 7,000 crore, and the order book of the company right now stands well over 1.3 lakh crore. However, what needs to be tracked is the kind of execution that BHEL would be able to manage and the kind of margins that they expect to order. NBCC, like you mentioned, over 490 crores worth of order wins that came in yesterday, stock surging on the back of that.
Okay, yes, order wins seem to be the key reason for those stocks in focus. But thanks, Vivek, for that. Let's move on then. City gas distributors are buzzing after the brokerage house City has published a constructive note on the sector. The regulatory authority, the PNGRB, has also issued a draft notification for gas distributors to establish and operate LNG terminals. Sonal has more details on this. Sonal.
Well, there are a couple of things which are happening with these gas names. Let me start with the City note first up, where they remain constructive on GAIL, IGL and MGL as well, and these are the preferred picks. They believe consolidation in CGD sector is likely going forward, and consolidation could benefit the larger, more experienced CGDs according to them. The second thing that they talk about is something that the other analysts have spoken about as well, is a possibility of gas coming under GST in the new NDA regime, and if that happens, that would benefit the entire value chain, allowing input tax credits and reducing costs for these companies as well. The second is two PNGRB notifications. The first one is allowing these companies to establish and operate LNG terminals. The LNG infrastructure would include receiving, storing, transporting LNG via their own terminals, because a lot of these companies have spoken about expanding from their current portfolio. The LNG terminal companies, they shall submit application for registration, and they should also furnish bank guarantees to the tune of around 1% of the estimated project cost, or 25 crore rupees, whichever is less. Board, after examining the application, may issue certificate to commence operations for around 30 years. Again, this is just a draft. The third piece of news is that PNGRB has issued another notification where they actually revoked the previous notification dated 13 September 2021, which would allow more marketing freedom to all these city gas distribution companies. They say that now the exclusivity factors would consider a lot of things, not just the number of years. It would consider the location, gas availability, population and aggregate demand as well. ICICI Securities says that this is positive for their coverage companies like MGL and Gujarat Gas and IGL as well, because there was a fear of more competition coming in with marketing exclusivity ending for a lot of these other companies. They see this notification to give some relief to existing CGD players that enjoy marketing exclusivity and something which is not ending in the near period.
All right, Sonal, thanks a lot for that. So those are the city gas distribution companies in focus on the back of a couple of brokerage notes and a lot of news factors, backing that itself. What we'll do is take a short break from the CNBC-TV18 election headquarters. On the other side, we'll have Aditya Agarwala, who's the head research and investments at Invest for Edu, joining in with some trading strategies.
हमारे जो नेता है नरेंद्र मोदी जी के नाम पर ये चुनाव लड़ा है, और उनकी जो क्रेडिबिलिटी है, उनकी जो गारंटी है, उन पर जो लोगों का विश्वास है, आज उसी का ही परिणाम है कि हम तीसरी बार जो है भारतीय जनता पार्टी जो है अपनी सरकार सेंटर में बनाने जा रही है, और आप सबका आशीर्वाद हमें चाहिए। और ये साथ ही मैं अब जो है आपसे मिलती रहूंगी, और आगे जो भी है, जो जिस तरह से हमारा
Welcome back. You're watching us here on Halftime Report. The Nifty holding with gains of about 130 points, fairly off the highs of closer to 22,900 mark, though it is still sitting on a good near 1,400 point rally from the lows that we saw on Tuesday itself. Important because it's the 6th of this month, which also means it's a Thursday and it is the weekly options expiry, the first one of this series, and more importantly the first one which also had the election results and a lot of other events backing it as well. So the Nifty weekly options expiry, it's holding with gains of around 22,750, and if you just take a look at the way the option writers are positioned, you know, on the way up, today's high of 22,900 is an important resistance. Why do I say that? Because there is a fair amount of writing on the 23,000 call, a psychological barrier that we have for the market right now, and the 22,900 call as well, equally active. So levels upwards of 22,930 to around 23,000 on the way up may face some resistance. Where does the support come in? Nifty is holding above that 22,700 mark. The 22,700 put has seen a fair amount of writing for a premium of 80 rupees. So closer to 22,600, 22,620 would be an important support, the first support. And below that, we have the 22,500 mark, which is also equally active as an option. So the broad range that you're looking at is 22,500 to 22,900 on the way up. And the 22,500 also has important technical levels as well as support. So you have the 20-day moving average at 22,513 and the 50-day moving average at 22,437, a level that was conquered in yesterday's recovery from the lows that we saw. What's interesting is that even as all the PSUs are rallying today, there's no fresh long positions which are being added. Instead, there are just a lot of shorts which are being covered. So you have BHEL, which is up 12%, Container Corp, which is up 5.5%, Bank of Baroda up around 4% as well. So to that extent, it will be important to see at what level does the short covering stop and we see fresh longs being added. And speaking about fresh longs, there are a lot of stocks which are actually doing well and seeing some fresh long additions as well. Aditya Birla Fashion and Retail, for instance, has conquered the 300 rupee mark, now at around 314 at a multi-month high for that stock, has been doing well ever since the last couple of months or so, ever since they announced the demerger of their businesses. Metropolis Health, definitely something's brewing out there with the kind of open interest jump that we've seen and a 3% up move on that stock. And IEX is the other one, which Vivek earlier told us, strong monthly update coming in out there. But that's the one which is seeing from some fresh long positions as well. So far we look like today's high on the index may have been made. Let's see where it goes from here. Do we see some sell-off in the second half of trade or not? And more importantly, in the PSUs itself, there has been a bounce, but that's a short covering bounce. So let's see whether there's some formidable buying that comes by out there as well, Ekta.
Okay, all right. So that's on the FNO setup. Just want to point out that there's some news on Orchid Pharma, and maybe the stock should come up for you. They've received DCGI approval for an API for basically a drug which is going to combat severe infections, and they're going to be launching this particular drug in the Indian market. It is indicated to treat very difficult to treat UTIs, hospital-acquired pneumonia, bacteria. So it will probably be important in terms of a drug launch for them. It'll be interesting to know the market size as well. Considering that, antimicrobial resistance, Mangalam is becoming a big issue where people are getting resistant to a lot of drugs, and hence new antibiotics are needed in order to combat severe infections. But we do have Aditya Agarwal, who's Head of Research and Investments at Invest4Edu, joining in on the show. Aditya, welcome to the show. What would your approach be towards the markets, considering it's gaining for the second straight day?
Good afternoon, Ekta. Good afternoon, Mangalam. Thanks for the show. It's a bounce back, Ekta, we can say. Markets become very choppy and volatile and on expected lines because we had seen that move from Monday till today. It's all over the place. I guess from now onwards, the markets will enter into a consolidation phase. We've seen the kind of sharp bounce back also from the lows of Tuesday. I think it's more of a stock specific and a sector specific market now, and on the upside 23,000 will act as a major resistance for the Nifty. And on the downside, I think markets will consolidate closer to about 22,500, 22,400. So the juice that you had in the Nifty and the Bank Nifty, I think that's over now. You'll have to be very selective and skeptical about where you're going long, because you might get caught on the wrong side and you can see some kind of a profit booking as well. So overall, I think for the day, Nifty might not scale past 23,000, as Mangalam also pointed out. The huge open interest build up on the call side. On the downside, I think markets will find support closer to about 22,700. So between 22,700, 22,900 is where I think markets might just expire between this range. On the Bank Nifty, clearly 50,000 is acting as a major resistance. And I think till the time that is taken out, I don't see fresh aggressive longs build up in the bank Nifty as well. So overall, it's a stock-specific market. One can stick to stock specifics and sector specifics in this market.
All right, so let's talk about stocks and sectors itself. Apart from the stocks that you've lined up for us today, just before we let you go, Aditya, also wanted your thoughts on the FMCG pack. The last 2 days have been extremely good. Today, seeing some profit taking. Do you think this is a dip worth buying?
Not today, Mangalam, but yes, I definitely believe there's more room on the upside as far as FMCG is concerned, especially your large cap FMCG stocks. If I talk of be it a Britannia or an HUL or maybe ITC hasn't performed yet, but I think it's time ITC will also chip in. So yes, today is a profit-taking day and a good time if you want to add partially, and maybe tomorrow or next week you can look to buy again in FMCG space, because I still see there's at least 10 to 15% room on the upside in most of the FMCG names, and you name it, be it a Britannia, HUL, Marico, ITC, I think all of them will continue to outperform from here on. And if I can add, I think IT is something which has been ignored big time. One should definitely start looking at IT sector. And from the mid-cap IT space, I think so you will see a good buying coming into the markets.
All right.
Okay. All right, Aditya. We're going to take a short break on that note. Thanks very much for joining in. I just want to get back to Orchid Pharma. Just an incremental piece of news which I just wanted to add is this particular drug that they've received approval for, Emetazobactam, is the same drug that they had out-licensed to a partner in the US many years ago, and which finally got the US FDA nod as well to be treated for severe infections. So I think that would be important because they were looking for an India launch. Orchid Pharma has the India rights to it. As you can see, the stock has spiked up, and its market is expected to be worth around 200 crores in the Indian market. So let's see if we can get in touch with the management. Overall, this should be an important development for Orchid Pharma from the Indian context.
What's the name of the drug again?
Emetazobactam.
Emetazobactam. All right, we'll practice that name. But in the meanwhile, what you do is take a short break, come back. On the other side, we'll bring you excerpts from our exclusive conversation with the management of Titan, especially on their jewelry vertical.
एग्जीक्यूट करने का और लॉन्च करने का वो हम डिस्कस करते रहेंगे। आप सब मीडिया बंधुओं का भी हमें जो है वो इसमें सहयोग चाहिए होगा, और मंडी का जो है अब भविष्य जो है बहुत ही उज्जवल होगा। धन्यवाद।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronically
Welcome back. Well, for the markets, it's holding up very steadily. No problems coming in. We have a very good advanced decline ratio like we've been pointing out. So on the National Stock Exchange, it currently stands at around 7:1. 2,000 stocks advancing to around 288 stocks which are declining. So you can see the gap, which is extremely wide when it comes to the advanced decline ratio. Always heartening to see after the kind of drubbing that we saw on Tuesday's trading session. In terms of specific stocks, just to point out, in terms of gainers this morning, we have the likes of State Bank of India, which is really topping the list. So good comeback for a couple of these PSUs banking stocks. We have SBI, which is up around 4% and a couple of others separately from, the outside that space is NTPC, which is rallying up around 3% A couple of these IT stocks are not doing too badly. HCL Tech has picked up around 4% this week and is up around 2.8% today as well. But we do have the management of Orchid Pharma to talk about the development that just took place. We have Manish Dhanuka, who's the MD of the company, joining in now. Mr. Dhanuka, thanks very much for joining in. Just give us a sense that this is the same drug, Emetazobactam, which was given US FDA nod in Feb of this year through your partner.
That is correct. That's correct. So This is an beta-lactamase inhibitor which goes with the antibiotics, and we are happy to announce that we have got the approval for this new inventive molecule which was invented by Orchid few years back, and a combination drug involving enmetazobactam along with an antibiotic called cefepime. So we feel very happy that with this particular drug we would be able to introduce a cost-effective and advanced injectable antibiotic therapy to India.
Right. So from a business standpoint, if you could give us a sense of how big the market for this product here in India is, and what's the kind of incremental revenue that you expect to get once you launch in India? By when does that happen?
So we have got the approval from the DCGI, and we are now going to the state licensing authorities for giving us the manufacturing licenses. And after that, we will go in for the manufacturing of the product. I expect this to take about 2 months' time, and we hope to launch it in the month of August. The drug has been approved for 3 indications, basically. One is the community-acquired pneumonia and the urinary tract infections and pyelonephritis and bacteremia. So these are the widest range of infections that occur in the hospital setting in India. I think this covers a very large population of infected patients. However, we would like to use the molecule judiciously in the light of impending antimicrobial resistance that's growing. And we would like to advise the doctors to use the medicine in patients which are resistant to other currently prevailing antibiotics.
Okay, so you're not saying that this should be a first line of treatment?
So the doctors will have to take that call, but we would like to promote it in a very judicious and ethical manner.
Right. The brokerages are estimating, sales of nearly 200 crores from a product like this. This is a note that is coming from Systematics. So would you confirm or deny this figure as fair?
So like I said, the patient population is large. However, it takes time to promote a new drug like this. It takes time. We do expect the sales to reach this kind of number, but how long it takes is difficult to predict at this point of time.
Okay. Can you tell us what the results have been in any kind of clinical trials that you've conducted for this particular drug in India?
So we have been asked by DCGI to carry out the phase 4 clinical trials, and based on the worldwide clinical trials that were done by our partners, they have given us this approval. So the trials were done on the urinary tract infections, and it was compared against a drug called piperacillin tazobactam. The drug was found to be 20% more effective against this particular prevailing drug.
It's 20% more effective than the current drug which is used for UTIs.
That is right. That is right.
Okay, but we haven't done independent trials in India to show the efficacy of the drug on the Indian population. You're going by what your partner has done in terms of the global trials, correct?
Yes, the DCGI has accepted that the trials, worldwide trials, were varied enough to accept the results of those trials. And based on that, we shall be carrying out the phase 4 trials while the product is being sold.
What is your sense in terms of the competition that you have currently within this space? I'm not talking about first line of treatment. I'm talking about, say, second line, last line of treatment, which would be along with your particular drug in the market to, say, treat a severe pneumonia or, say, treat a severe UTI.
So you see the major advantage of the drug is that it is carbapenem sparing. So as per the guidelines of the ICMR, the carbapenems have to be used very judiciously, and they should not be used as a first line of treatment. However, unfortunately, when doctor finds a patient which is in serious need, they do tend to inject carbapenems. So this therapy can cure the infections which are resistant to the first line of antibiotics, and the resistance has developed over the last few years. And if this drug is used as against the carbapenems, it will save carbapenems for the future generations. That's the major advantage we think this drug presents.
Fair point there. Thank you for explaining this drug's potential to us. But since we have you with us, I can't let you go about without asking you about the entire company itself. You had earlier indicated to us that 15 to 20% revenue CAGR over the next 3 to 4 years is something that you're poised for. So if you could refresh that guidance for us. And I remember particularly well that you said that you are looking to increase your capacity utilization. Where does that stand at right now? Where do you end this year with, and what does that do to your margins?
Yeah, so we finished the financial year 24 with the sales of 19 crores as against 666 crore we did in FY23. So this works out to a 22% CAGR. And we achieved an EBITDA of 142 crores against 103 crores for the last year. So this is about 30% of EBITDA CAGR. So I think last 3 years we have been on course in these in the range of these numbers, and we hope to continue doing this. There is a capacity expansion that was completed last year, which has gone on production this year, and there is another round of expansion going on, which we hope to complete during the second quarter. And hopefully, keeping our fingers crossed, we wish to achieve the same kind of growth this year.
Okay, just a quick question coming back to this drug. Which other markets are you able to probably get approval and sell the drug in?
So the licensee has got the approvals in Europe and the US. The approval process is going on in China, but Orchid per se has the rights only in India.
Okay, so your rights are limited to India. Just a quick last question. Q4, your margins came down significantly. Why is that, and what are you guiding for?
So you see, because we are a B2B supplier and the average size of the consignment is large, we do not wish to look at the percentages from quarter to quarter. It depends which markets were supplied in which quarter and what consignment. So like we operate in the regulated and the non-regulated, both the spaces. So depending on which markets got supplied during that quarter, the percentage of EBITDA varies from quarter to quarter.
And by when do you reach this 200 crore run rate for this drug? You said that at some point you will, but just wanted to understand, is it FY26, FY27? By when does that happen?
Yeah, we expect to do it, say, after about 2 years of launch, 2.5 years of launch.
Okay, all right. We're going to leave it on that note. A pleasure speaking with you, and on such short notice as well. Thanks very much for joining in and talking to CNBC TV18. That's Orchid Pharma. Stock is up around 2.8% at this point in time. We'll take a short break. On the other side, we'll focus on the FMCG space, which has really been the talk in the past 2 trading sessions odd. We have Naveen Trivedi of Motilal Oswal Financial Services who will be with us. Stay tuned.
India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Welcome back. Well, the Titan management tells CNBC-TV18 that it is confident of turning EBIT positive in all emerging businesses by the end of FY27. My co-anchor Mangalam did catch up with the company's MD and CEO of the watches, wearables and eye care business to discuss their growth outlook. Listen in to an excerpt of that exclusive conversation.
I think competitive intensity in jewelry has always been high because it's an unorganized market and large number of players. It's also a huge category, right? It's about 500 to 550,000 crores. And obviously it's going to attract more and more players. But for us, we are still, high single digit growth market share. We are only at about 8% market share. So the headroom is huge, both in terms of share gain, as well as if I look at the dispersion of segments, be it markets, as well as maybe different segments, be it high value studded, be it wedding, regional markets. So the opportunity for us is huge, including the small town opportunity. Middle India is a huge base in India. There are 500 towns in the 1 lakh to 1 million population strata. And we are present in only about 180 of those. While we don't know if all 500 towns will ever get ready, but the headroom again offers a very large opportunity for us. So all in all, I would say the share gain opportunity is so huge that even if 5, 6 more big players or competitors come in, there's opportunity for everyone.
So to that extent, say over the next couple of years, what would your store rollout plan be, and what's your aspiration here?
Over the next 3 years, we see, easily we can add about 100 plus stores in Tanishq. We can add about 150 to 200 stores in Mia, and certainly 100 plus to 150 stores in Carrot Lane. Zoya also there's an opportunity, but there we are not looking at large number of stores. So in totality, the opportunity to add 300-400 stores is very comfortable.
One of the concerns that the analysts had, was the ability for the company to grow its margins from current levels. In fact, 12 to 13% was the guidance, saying that over the next couple of years, it may be at the lower end of that space itself. So should one believe that these issues right now are structural, or are there levers to improve them further from here?
I think at an overall domestic jewelry business, we shared that EBIT margins would be anchored around the 12% mark. And while there will be ups and downs quarter to quarter, but on an annualized basis, that's where we hope to. I don't know about growing the margins. Yes, with a certain operating leverage, it can grow. But in the medium term, we expect it to be around the 12%.
Ajoy, I have to ask you this. Tanishq, strong brand, mother brand when it comes to the jewelry business. But a lot of people are now looking at jewelry as adornment, so which is why you all, spawned other brands and scaling that up as well. If I had to look at one of your group companies, Trent, they, got a big upsurge in the value category with Zudio. So is there a potential for Zudioization of jewelry in the Titan business?
Good question. Perhaps there can be. But the difference, I guess, between the two categories is that there is a certain price sensitivity when it comes to buying garments and maybe other categories. In jewelry, there is a mix of both adornment and investment value. It's not one or the other. In terms of sheer number of buyers, we do see good opportunities even within Tanishq as well as Carrot Lane and Mia, adding to large number of buyers. So from a buyer base, yes, but because the value of gold and diamonds is so high, and gold is also going up, the total value turnover may not follow the same trajectory like that might happen in garments. But you're right that in the sub 100,000 space, large number of buyers can come into our category, and we should look at that opportunity.
Since there are a lot of players, do you think it makes sense for now Titan to make a move there, maybe acquire some people out there, or maybe, just organically start and grow in that part of the business?
I think the competitive intensity is not as strong there. There are some new players which have come in. The competitive intensity in the mainstream business is much larger. In the sub 100,000 studded space, I think it's a matter of growing the category. And as more and more players come in there, many more millions of customers can come there. And we have 3 brands which play strongly amongst maybe a cluster of 8 or 9 brands which might be existing there. So I think right now we don't need to add more brands there as much as allowing organic growth to happen. And we are doing that through adding significant number of stores and collections.
Are you comfortable with the growth rate at which Carrot Lane is as of FY24? Because if I look at it, you know, FY21 was a sub 700 crore business, thereafter turned into 1200 crores that grew to 2200 crores. So the CAGR between FY21 and FY23 has been a lot more than what it was in FY24. So I just wanted to understand the sustainable growth rate for a company like Carrot Lane.
So FY24 Carrot Lane grew at 34%.
Yes.
And while the CAGR over the last 5 years is around 47%. So yes, comparatively, but the base has also gone up. Now, last year, there was a certain significant pressure that I think started coming in maybe post Diwali. And therefore, certain growth rates in many discretionary categories came under pressure. And in the studded space, I think the customer segment that was operating, especially in this sub 100,000, has come under some amount of economic sentiment related issues. But I think what is an appropriate CAGR? On a small base, you can show a CAGR of 40-50%. But at the base at which Carrot Lane is, I think 30 to 35% CAGR is good. I don't think the market is growing at that rate. So it's a good opportunity.
All right, 30 to 35% CAGR for the Carrot Lane business, along with 12% margins for the entire jewelry business, growing at around 15 to 20% compounding over the next 3 years. That's the course of action for Titan going from here. Speaking about a huge headroom for market share gains as well, at 60 times plus valuation, how much juice is left in the stock? We'll leave that to our next guest, because it's the FMCG space which has been in focus over the last 2 trading sessions. A big move is what we've seen in a lot of these staples names, be it HUL, Dabur, Britannia, or even the smaller names like Imami and Jyoti Labs. Naveen Trivedi, who's the Senior VP Research Analyst, Consumer and FMCG Institutional Equities at Motilal Oswal, joins in now with his call on the sector. Naveen, first we congratulate you for the call on the sector. In fact, you were the one among the first few ones to turn bullish on the sector way back in April itself, on the back of strong management commentary and risk reward on the space. And now it's been peppered with, the recent up move that we've seen in the stocks, with the street looking at this space as a possible portfolio reallocation as well. What's interesting in your note is that despite this up move, you believe that there is case for re-rating beyond what you've earlier estimated. You say that you estimated high single-digit volume growth for FY25 and FY26 with an upside risk to that. So could you explain that to us? Where does that optimism come from?
Yeah, sure. Thank you so much, Mangalam. If you look at the even the last quarter commentary also, where some of the management had highlighted about the recovery in the quarter 4 in the rural side has seen a meaningful pickup. And if you look at the amount of drives which the companies are working around the distribution side, new launches side, the once you start seeing the overall recovery, all other initiatives will also adds up in terms of the volume growth, which we so far we are building up around a high single digit sort of a growth rate for most of the names. Our take here is that we so far has not added the advantages of. If you see the rural side, the monsoon is also in their favor. If the crude side also, basket has seen in their favor. So there is still a room where they can still pass on more benefits to the consumer, to which if you look at last 2-year context, where the lower strata level where the consumption was under pressure. Once you see that the pricing side, some benefits if you pass on to the rural side, where the consumption was muted for last 2 years, there can be further levers in terms of the more volume pickup in the coming years. And thereby, even in our note, we highlighted about that. So far, we are not building up a double-digit volume growth case, but yeah, high single-digit volume growth sort of number is expected on our cards.
Okay. All right. Naveen, how would one justify the valuation of around 49 times 1 year forward when it comes to HUL?
Sure. If you look at the last 5-year average PE multiple for lever is close to 60 times. And then we have seen last 2 years of underperformance of the entire sector, including lever. If you look at the volume side recovery, if they sustain this sort of a meaningful reversion in the volume growth side, the confidence level will also goes up to the valuation side. So far, we are seeing that some amount of sequential improvement has happened in some of the cases in the Q4. If this sustainability trend sustained for another couple of more quarters, the valuation gap which was there for around 15 to 20% for most of the names, which even Mangalam highlighted about Dabur, lever, where we have seen there was a meaningful multiple correction has happened. Once you see the earnings side improvement, the gap will further narrow down, which we have seen last 2 trading days also. It is covered up to a bit, but if they sustain the volume growth trajectory, I would expect that the gap will further narrow down.
Right. You know, when you had written the note, it was April. From then to now, the stocks have seen a rally of anywhere between 5 to 15%. The last 2 days in particular itself, you know, even if you account for the profit booking that we're seeing today, these stocks are up around 8 to 10% as well. How much more upside do you see over the next few months, the 1 year that we foresee from here?
Mangalam, I would say it will be again a very specific counter to counter depending on how these companies can drive the volume growth, and on top of that, what it looks like more sustainable volume growth sort of a trajectory. There may be a case where some basket will see a more channel filling, some basket will see more seasonality in their favor, but the company who can really demonstrate more around sustainability for the next 2 years sort of a time frame, 2 or 3 years sort of a time frame, I would expect that those counters will sustain the rich valuation, and then there is also a possibility of earning upgrade on that sort of a company. So I would expect that leave about a monthly up and down, but looking at the slightly F25 and 26 sort of a time frame, I would still expect that there is a decent upside in across staples. So our topics are in the staples are lever, Dabur, and Godrej consumers. Although like we are generally bullish on the staples, and we remain overweight on the staple side.
Okay. What is the risk according to you, probably in terms of your earnings estimate now?
As of now, until if you look at the again the monsoon side, if there is any slippages, or maybe the RM basket, if there is any reversal sort of a thing, as of now it doesn't look like. But if there is any slippages there which can impact the rural consumption, that is a risk you have to look at in the numbers.
All right, and usually what IT analysts do is separate the IT companies into 2 buckets. You have the large cap IT names, and then you have the mid cap IT names. Mid caps, of course, have a lot more delta. In FMCG, do you think there is case for that now? Because your top picks you've stated as HUL, Dabur, and GCPL, can put them in the large cap bucket. But then you have the second rung of names which are doing extremely well as well, and they trade at a significant discount to these large caps. You have the likes of Emami, Jyoti Lab, you have Bajaj Consumer, you have that entire basket. So is there anything in particular that you like from that basket?
So Emami also we have buy rating on, and I would expect that the seasonal tailwinds also will favor to both the portfolio, summer portfolio and the winter portfolio. So F25 will be the year where they can deliver the volumes growth side of our outperformance. And on top of that, this is one counter where the valuations were always on the lower side. Because the top of the brands were always looking like a user addition as a problem. They've acquired some businesses in the last 1 to 2 years sort of a time frame, and on top of that, if the core portfolio start doing well, I would expect that there is also a possibility of a multiple revision in the Emami, where the multiple were used to be less than 30 times. So that can be a case for Emami if they sustain the beyond seasonality sort of a play also.
All right, so there is case for multiple re-rating on Emami as well. Final question, since we started out by listening to what the Titan management had to say to us, and you were at the Titan Analyst Day as well, what do you make of that space right now? And would you prefer Titan over Kalyan and Senco, or is it the lower level stocks, that the lower players that you would prefer over Titan right now, given the valuation discount?
Sure. Mangalam, in the jewelry space, we only cover Titan so far, so I will only restrict my comment around Titan. Jewelry we like within discretionary, where we are still seeing the growth is not a concern area. The concern area was on the margin side, which also Titan had highlighted in their analyst meet, and they're highlighting around 12% EBIT margin for the jewelry business. I would expect that even if they can maintain this sort of a margin, and if they can sustain a growth drive, which they have last 3-4 years, 5 years, they could demonstrate on the jewelry side. We remain on the bullish side on the Titan also. So growth side, the concerns are not as high versus the margin side, which also I would expect that 12% level has a lower risk if they get off slippages side.
Okay, all right, Naveen, we're going to let you go on that note, but extremely comprehensive discussion there on the entire FMCG space, which has really been the toast of the market, but coming off today, so rightly so, some amount of profits probably being taken off the table. So HUL, for example, is down around 2% at this point, is your top loser on the Nifty. We'll take a short break, get you more on the markets, lot of stocks in focus. Stay tuned.
I'm in a very totally ecstatic mode now, because what was so very impossible has become
पढ़ें.
Let's focus on some stocks which are reacting to news. Century Textiles up in double digits today. Sonal tells us what's happening out here. Sonal.
Well, Century Textiles wholly owned subsidiary, that is Birla Estates, has entered into a joint venture which is with Barmalt India Private Limited. They will be developing around 13.27 acre of land parcel for a luxury residential group housing in Gurugram under this particular joint venture. The development potential is approximately 2.4 million square feet, and it will offer them a revenue potential of up to 5,000 crore rupees. And remember, NCR is a region where a lot of new developers are entering. They're not new here, but of course they're expanding their footprint in the NCR region as well. Remember, the stock is up 67% in last 6 months itself, and adding on to some gains. So Street likes the expansion plans that they have in the NCR region.
Okay, all right. So that's on Century Textiles. Thanks, Sonal, for that. Hindustan Aeronautics is buzzing today after it inaugurated a facility to support ISRO program. CLSA has also issued a note on the stock. Upasna has all of the details on this. Upasna.
ISRO chairman inaugurates HAL facilities to support LVM-3 programs. Mind you, currently the existing capacity allows only 2 LVM-3 launches per year. This facility will support the production of 6 LVM-3 rockets per year. And mind you, post-election results, CLSA had written a note on defense sector wherein it has retained outperform rating on HAL with a target price of 4,731. It says that the expensive valuations leave little space for execution error. Company has also given a EBITDA margin guidance of 32 to 33% in next 2 years. And for FY25, the company is guiding for a order book of 47,000 crores, excluding the MRO division. As of 31st March 2024, the company's order book stands in excess of 94,000 crores, and company says that it is confident of maintaining FY24 growth momentum on the back of robust order book and strong order pipeline.
All right, Upasna, thanks a lot for that. That's about HAL. All the PSU stocks doing extremely well today after the drubbing that we saw in the last couple of trading sessions. But that's about the equity markets. We take a short break. On the other side, as always, Manisha Gupta joins in with all things commodities. And today she has with her Ajay Goyal, who's the chairman, Wheat Products Promotion Society.
And it's definitely blessings from my grandparents who worked up to having the Janasank during 30s. They were working then. And the kind of pains and travels that they had to go through, all that is getting paid now. It's a tribute to them as well.
Welcome back, and joining us on the show now is Ajay Goel. He's Chairman, Wheat Product Promotion Society. Mr. Goel, thank you so much for joining us. When it comes to wheat, there are various stories and various numbers floating around, and the reason to call you today is to get some clarity on all of this. First of all, your sense on the procurement. We are higher than last year in sense of what India procured, but lower than what India had set out a target as. So where do we stand right now, and do you still see these numbers rising?
So last year itself, we were really short of the target, and so are we this year. This year, the target was quite ambitious at 36 million, against which we have procured around 26 odd million. The real problem is that the government expectation of the crop seems to be higher than the ground reality. This year, again, it has been revised upward to beyond 112 million tons by a few points. But the situation on the ground doesn't seem like, we've had such a large crops in the last 2 years. And you can also make out in the year 2022, when government, estimating a much higher crop, actually allowed exports. And then within a month or so, they had to ban exports because on the ground, the crop really didn't seem as large as they were projecting. So I think we are still again into a hand-to-mouth year this year.
Absolutely. Mr. Goel, there was a Reuters story suggesting that India could open exports in this year after that ban that we saw in 2022. Do you see any possibility of that at all?
So imports seem imminent in this year, primarily because the government doesn't have sufficient stocks to, intervene in the markets at the right time. They are also just barely enough for their buffer and the various programs that they're running, and not enough for real market intervention. So I guess somewhere around August, September, if they find that, demand is far exceeding the supply that the market is offering, definitely the government will have to tweak its duty down from 40% to maybe zero. And it seems most likely with a new government in the center, there could be a shift in policy as far as wheat imports are concerned.
Absolutely. So what you're saying is that imports is what we will perhaps most definitely see happen by the month of June, as you said, once we have those numbers all clear in front of us. And exports is something that there is no possibility of in this year.
So there has only been a cry for Indian atta to be exported for the Indian diaspora globally. And that demand continues by the Indian populace living overseas. And there has been a lot of effort put into marketing Indian atta globally and establishing the supply chains and things like that. So the government has opened a small window wherein you can import and then export atta, which is not really the viable solution, as the Indians want Indian wheat ka atta globally. So I am hopeful that the government will reconsider the export ban on atta, at least in consumer packs.
Mr. Goel, also, what's your sense on prices right now? Because, this is a debate that we are having even now as the street awaits the Kharif MSP. The MSP as a subject has been in conversation for some time. When you look at the wheat prices, what's your sense on where we stand and where are we headed as June comes and you see demand coming back even stronger?
So I think market prices are about 3-4% higher than the procurement price plus the cost, and they are moving in tandem with the procurement prices year after year. But the real stress comes in post harvest and post May, June, when the arrivals in the mandis stop, and then everybody starts looking towards the government if they are going to be releasing stocks in the market. So I would say the market could have been lower considering government MSP by about 3 to 4%. But that's the way the markets are, and currently the market is about 4-5% higher than government procurement prices.
Okay. Mr. Goel, the other thing really is about the maths. I mean, if we go with the numbers that we have in hand right now, what's your sense with 17-18 million tons going for PDS? What is the sense that you get for our OMS? Because last year was a record number at more than 10 million tons, and then the closing stock itself. So how are you stacking those numbers there?
So I think primarily the government has replaced wheat with rice in a number of states, and at some point it will have to reconsider, especially in the northern heartland where wheat is more preferred over rice. And if the government wants to really rejig that and restore the old supply model, they will definitely fall short for OMSs. And actually, we are just at the edge of everything. We really have to struggle to. We don't have the sense of plenty right now in the marketplace or with the government, which is really the essence of keeping the markets in control.
Oh, well, absolutely that. So there are those concerns continuing in case of wheat. But as you said, that month of May and June is going to be quite important. Once the arrival completely stop and we have a final figure in hand is what we'll know on what the new government perhaps will approach wheat as, which is an essential commodity. And as of now, we have 44% of import duty continuing in case of wheat. Mr. Goel, as always, thank you so much for joining us. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Stocks gain on expectations of the NDA's return and policy continuity. Despite coalition compulsions, the market gives up some ground even as PSU stocks lead the charge besides utilities, realty and capital goods, and FMCG is the weak link. BHEL bags two orders aggregating to over 7,000 crore rupees. RVNL also clocks a new order win, and NBCC snaps up orders of just under 500 crore rupees. The wins and NDA's expected return fuel optimism on capex. Titan has started selling sunglasses via quick commerce and is set to sell prescription eyewear online. The management tells CNBC-TV18 that it is confident of turning EBIT positive in all emerging businesses by the end of FY27. Murugappa Group's Vellayan Subbiah tells CNBC-TV18 that he is confident of CG Power's bet on e-mobility and plans to launch a three-wheeler, a truck and a tractor. He is also building a chip assembly and testing unit in Gujarat and plans a foray into appliances with CG Power. And Nvidia becomes the second most valuable company after Microsoft and ahead of Apple after its market cap tops $3 trillion. This even as regulators are likely to start antitrust probes into roles of Microsoft, OpenAI and Nvidia in the artificial intelligence industry. Hello and welcome to CNBC-TV18's HDFC Sky Election Headquarters. I am Hormuz Fatakia. You're watching Business Lunch, and it's a day when the market continues to recover after that sharp sell-off that we saw during Tuesday's trading session. There is some bit of recovery, but the market is off the highs of the day but continues to trade in positive territory. There you can see the Nifty finding some resistance at around 22,900, and it is now trading around levels of 22,750, still 100 points higher on the Nifty Bank as well. That has been the one that saw the biggest fall during the results day. That was down almost 4,000 points. It recovered some around 1,200 of them yesterday, but it has almost given up all the gains, has the Nifty Bank, finding some resistance around 49,680 and giving up those gains now is struggling to hold on to the mark of 49,000. But what is doing well though are PSU stocks, and those were the ones that were in focus. There has been a lot of chatter about all the PSU stocks after the election outcome. MK in its note even went on to say that they have exited all of their PSU holdings, but they are staging a comeback. BHEL is up 9%, pull up REC and PFC as well. Those were the ones that were down almost 25% during Tuesday's trading session. They saw some bit of recovery, and that is continuing today as well. REC is up 6%. PFC is also up around 4.5%. All of them are off the highs of the day, mind you, but they continue to trade with gains. But let's shift focus now to some post-election verdict developments. Parikshit is now joining in to give us the latest roundup of all the developments that have taken place in the national capital. Parikshit, over to you.
Well, absolutely. A lot of key meetings taking place in the national capital. Nitish Kumar is still here. Several JDU leaders, MPs who have been elected have been holding meetings at his residence. Tomorrow is the key NDA meeting where all the NDA MPs who have been elected will come together in Parliament for a meeting. All eyes now on the swearing-in ceremony likely to take place on the 8th, that is Saturday. We've got leaders from India's neighborhood who have been invited, heads of state, heads of government. Now, in terms of the actual nitty-gritties of cabinet portfolios, this time it is a coalition government. We believe that the TDP has asked for at least 3 to 4 key portfolios. The Speaker's post has also been asked for by the JDU and by the TDP. The JDU has asked for some important portfolios such as infrastructure ministries, economic ministries as well. Same for the JDU. They've asked for 4 to 5 cabinet berths. So it remains to be seen how the Prime Minister, Amit Shah, Rajnath Singh, JP Nada, who've really been holding all those back-channel negotiations with allies, will actually accommodate everyone. Even allies like the LJP, they've asked for 1 cabinet post, an MOS post as well. So let's wait and see how different allies, because the allies this time are very important for the NDA. The BJP has not been able to form a government on its own. So all of these allies and their MPs will have to be accommodated in some way or the other. The swearing-in ceremony will take place in the Rashtrapati Bhavan. As far as speculation about the India Alliance forming government, the message coming in from the India Alliance, it seems, is that they will play the role of a constructive opposition. They do not have the numbers on their own to form the government, and even if they do try and reach out to certain independents and other parties, they'll not be able to form the government. So even NDA leaders, BJP MPs who've called on Nitish Kumar and the TDP, Chandrababu Naidu, they've all said that both these leaders are completely with us. They have asked for special status for Andhra Pradesh and Bihar. So let's see what happens. Of course, there will be a lot of young faces in the cabinet this time, a lot of new faces, because big ministers such as Mahendranath Pandey, who was the heavy industries minister, he's lost his election. Rajiv Chandrasekhar, who was a big face for all the IT industry talks from the government side, he's also lost his election as MOS matey. So let's see what happens. A lot of new faces set to be inducted into the cabinet.
Parikshit, thanks a lot for that. And continuing with our post-election coverage, let's cut across to Shireen Bhan, who is in conversation with Tamil Nadu's Minister of Industries, TRB Raja. Shireen, over to you.
Well, the India opposition bloc registered a clean sweep in Tamil Nadu. The DMK Congress Left Alliance, which also includes some regional parties, won all 39 seats in the state. The DMK contested on 22 seats, leaving the rest for the allies. The Stalin-led party won all Lok Sabha seats in 2019 as well. The alliance as a whole had lost just one Lok Sabha seat. DMK chief M.K. Stalin was also part of the India Alliance meeting that took place yesterday. Joining me now to discuss the latest developments is TRB Raja, the Industries Minister from Tamil Nadu. Mr. Raja, always a pleasure. Many thanks for joining us here on CNBC-TV18, and congratulations to you and the India Alliance for that clean sweep as far as the state of Tamil Nadu is concerned. What do you read into, this as far as this victory is concerned? Because this was a state where the Prime Minister spent a lot of his time, his focus, his attention on. What do you think went in your favor?
I think we kept it simple. Our leader, what went in our favor was our leader's excellent work and his dedication on the field, on his focus on real issues. We focused on jobs. We focused on getting the entire economy back on track. We had a very bad 10-year regime and COVID's effects. As soon as my leader, through M.K. Stalin, took over, he made sure that the economy was back on track. And he also sent out a very strong message to India as such, to the entire country. He said he will stand by those who are with social justice, those who are for equity, those who are for inclusive growth. And he stuck to his guns, even though the regime up top let loose the entire machinery that they had with them against the state. We had so many issues, but he stood like a rock. He said, no, I'm not going to budge. I'm going to stay for India, which is more secular, more, and he would stand always for the democratic values and for cooperative federalism.
You mentioned cooperative federalism, Mr. Raja. What do you think this verdict means now as far as cooperative federalism is concerned? The DMK and the India Alliance from Tamil Nadu will send 39 MPs to the Lok Sabha. In terms of perhaps evening out the balance that had shifted in your assessment and in the assessment of opposition leaders like yourselves in favor of the centre, do you believe that there is going to now be a rebalancing?
Absolutely, and I think I'm extremely glad that Chief Minister Chandrababu Naidu also has been a very vociferous proponent of cooperative federalism, because as the Chief Minister himself and his extremely beautiful relationship with our leaders, my leader Kalainger Avargal and our present Chief Minister, my leader through M.K. Stalin will share a very beautiful relationship with through Chandrababu Naidu Avargal, and we know that he's going to make sure that there's going to be that cooperative federalism is key for this new regime.
Mr. Raja, you talked about, in your words, this beautiful friendship between Chandrababu Naidu and M.K. Stalin. In fact, M.K. Stalin and Chandrababu Naidu did meet yesterday in the capital as the NDA and the India Alliance meetings were underway. And there was a lot of speculation on whether overtures are being made to Mr. Naidu. Of course, now the NDA resolution has been passed and the TDP is firmly with the BJP and they will stake claim to form government. But, the Chandrababu Naidu is also the first CEO, Chief Minister, the original CEO, Chief Minister. As you start to now compete with another state for investments, how do you view the competitive landscape?
My leader is a very mature leader, and he's always been telling us that we compete. It has to be a very mature, friendly competition, and we compete for India as a state. So it is not for just one state. We compete. We've always competed and made sure that we've gotten the best investments in the best interest of the country. So we know that we'll be competing with several other states now, but we have our strengths on our own. There's no match for Tamil Nadu. Tamil Nadu is the #1 state when it comes to investment promotion and making sure that the investments thrive in the country.
Well, speaking of investments, Mr. Raja, I know that you were also reaching out to Elon Musk and the team at Tesla to try and woo them to set up shop in the state of Tamil Nadu. Where do those talks stand? Has any progress been made on that front?
I can only tell you that any and all the big investments that are coming into India, their first stop has always been Tamil Nadu, and we make sure that all the big things, big investments come into Tamil Nadu if the incentive package is sensible, because we are very, very careful about how we spend the money, the people's money, on incentives, and make sure that if any of these investments are coming, they've got to give us big jobs and high-end jobs. That's what Tamil Nadu wants.
Mr. Raja, you spoke about that relationship that your leader enjoys with Chandrababu Naidu. So let me ask you a larger question about the concern that southern states have with respect to delimitation and that exercise and the implications come 2026. Is this going to be an area, an issue that you believe that the DMK and the TDP will take up together?
Yes, absolutely. Because all the southern states have been very good at population control, and we worked on what the union said decades back, and we've done a very, very good job. Now, that doing a good job should not be punished, right? Somebody doing a good job should not be punished, and I think the entire spectrum of leaders, sensible leaders all over India, agree with that point. And our genuine request will be heeded too, and I think we'll make good ground on that now.
Okay. Would you be concerned, though, while it still has been a clean sweep for the India Alliance in Tamil Nadu, would you be concerned with the fact that you've got the BJP and the NDA's vote share going up to almost about 12%, and the AIA-DMK is actually lost in many of those crucial constituencies, 12 constituencies, the AIA-DMK finding itself in the number 3 position versus the NDA at number 2. So, next assembly election, how concerned are you that it's going to be a battle between you and the BJP-led NDA?
Answer is just there in your observation itself. The BJP has not gained. That is it. That's the bottom line. They have not gained. What has happened is a result of the tacit understanding that the BJP had with the ADMK. The votes that they've gotten has come from the ADMK, and their leadership and their local leadership has tied up with they had an understanding with the BJP. And this is exactly what the DMK has been saying from day one, that these guys have really not parted ways. So they are together. They did fight it as one. Some of the hardcore real ADMK party men said, no, we're not going to vote for BJP. And that's why they stuck to the 17%, or else they would have gone even below that. Whatever the BJP has gained has been the loss of ADMK. So that's going to be corrected, hopefully, within the house of ADMK. I think a lot of noise has already started within the ADMK now, and the earlier ADMK, if you want to call, and right. Those who left or those who were thrown out have been called back now. So that they're correcting their house, they're trying to get their house in order. But BJP has not gained in Tamil Nadu. They've only gotten help from ADMK, and that's a temporary issue. BJP will never, ever increase their vote share in Tamil Nadu.
Is there clarity now, and there was, of course, that first meeting of the India bloc post the elections that took place last evening. Is there clarity on the issues that you intend to take up, the issues that you intend to raise in Parliament? For instance, we're already seeing many parties raise the issue of Agniveer, seeking a review as far as the Agniveer scheme is concerned. This is something that Rahul Gandhi was vociferously backing as well. But outside of that, other specific issues that the bloc intends to raise?
There are loads of issues, including CAA and other issues. GST has to be relooked into. And as I said, as a federal country, the interest of states, each and every state must take center stage. And Parliament must be a place where we talk about states and not just Delhi, right? Not just Delhi and its interests. Parliament must be a space where we talk about how we distribute the wealth of India in a very sensible way, and not just throw money away when hardworking southern states or any other state for that matter, when the money of people of India, all the states of India, is pulled into one pool, at Delhi, and if it's given off to certain, if it's some vested interest, then India loses on its own, as a country loses. So this is what the states have been saying, and we want our equal share. Our share. This has been a huge political. We've been watching it out throughout our campaign here in Tamil Nadu, and I think that needs to be corrected first. Whatever, we're happy to give money. We're happy to give our share to the nation, to nation building. But we just hope nation building happens all over India and not just in states where the central government or the union government, whichever party is in power in the union, it should not be biased towards states where they are in power.
Right. Mr. Raja, very quickly, we're running out of time, but on the GST, you said that you intend to raise the GST as a cause for concern as well. What specifically would you now like to be reviewed? The rate structure, the 5-slab structure has been something that one would imagine would be taken up with the new dispensation being in office. The Congress has suggested 3 rates. What is it that you would raise as a concern? What is it that you would like to see being changed with the GST?
Yeah, my Chief Minister, Venkata Stalin, has already advised our Finance Minister to Gangam Tanur Saval, and he's been very vociferous at the GST Council. You do know that Tamil Nadu has always spoken excellently at the GST Council and set standards for India. We have our own issues, we have our own thought processes when it comes to what GST stats have to be, and definitely reducing them is definitely on the cards, and that's a must for India's overall growth, especially for the MSME sector. There's loads of requests from the MSME sector here that I know of personally. I've been campaigning in Coimbatore, which is a huge MSME base, industrial base, and all those requests I've given it to my minister, my Chief Minister, and I'm sure all of this is going to come up. And GST is going to be one of the most important matter that's going to be discussed in Parliament. We're going to get our way on that.
GST will be one of the most important issues that the India bloc intends to take up. A rationalization of rates is certainly something that has been on the table, hasn't been taken up so far, but TRB Raja there, the Industry Minister of Tamil Nadu, saying that it will be pushed by the India Alliance when Parliament reconvenes. Mr. Raja, always a pleasure. Appreciate you joining us today to decode the electoral result, what it means not just for the state of Tamil Nadu, but also for the Lok Sabha when we see the new Parliament taking shape. Thanks very much for joining us here today. Well, that's the latest newsmaker here on the election exchange. There's plenty more coming up. Hormuz, back to you.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Back with us here on Business Lunch, and now CG Power will foray into the consumer business by selling appliances. Now that is the word coming in from Murugappa Group's Velayan Subaya. Now he spoke to Shireen Bhan from the sidelines of the EY World Entrepreneur Awards in Monte Carlo, where he is representing India. Subaya said that he was betting big on the electric mobility and semiconductor businesses. However, he also ruled out any acquisitions in the near future, and he's betting on organic growth and partnerships.
A new business that we're adding in that mix is the consumer business, because a non-compete got over in 2021. So that continues to have a lot of opportunity. For the consumer business, we basically start with fans and pumps and kind of, the more general electrical appliance areas, and then look at new areas for growth beyond that. So for the first couple of years, we'll just be establishing a beachhead in those areas, and then we start looking at what we can do from a growth perspective. Government has been very, very fast with all of its approvals. We've just started the design and building of the factory in Gujarat, but these are quite complex factories to build. So our estimates are it'll be 2026 before we can basically start operations at that factory. But we're kind of going full steam ahead. We've got I would say over 50% of the senior level memberships of the team basically recruited, and we're basically working on the design and build at this stage. I think the semiconductor industry is really going to mushroom in India. I think there's a lot of potential for it, just because of the raw horsepower we have in terms of intellectual capacity. Almost 20% of the world's semiconductor design engineers are Indian, right? So I do feel like that sector has tremendous potential in India, and it's a sector that I personally am again very, very optimistic about in terms of the opportunities for the country.
And we have a very interesting story on CG Power that was done by my colleague Prashant just a few weeks ago. So you can catch that on our social media handles and also on CNBCTV18.com. But time for a short break here on Business Lunch. When we return, we'll get you more news and updates on the other side. Stay tuned.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. The market seems to be cooling off a little more from the highs of the day, or even when we began the show. The Nifty is now at 22,720. It's extremely choppy as of now. It fell to the day's low, then there came a bit of a recovery from the lowest levels of the day, and now the Nifty is facing some pressure there as well. So 22,720 is where the Nifty is. The Nifty Bank continues to remain where it was at the start of the show, so that remains flat. But the contributors there, you can see what's dragging the index lower are banking stocks, and Axis Bank, ICICI Bank, HUL, the star of yesterday's trading session, is now back among the losers and is also among the biggest drags on the index, as is Mahindra and Mahindra. But for Mahindra and Mahindra, you need to be mindful of the fact that the stock is already up 60% already in 2024. It is the best performer on the Nifty. So a bit of profit booking from higher levels is par for the course. What is doing well though is IT, and those HCL Tech, Infosys, Tech Mahindra is the top gainer now. HCL Tech is the top gainer on the Nifty, both trading with gains of around 3.5% each. Infosys is also among the top contributors as well. So IT doing well, real estate doing well, and PSUs continue to do well, but the index is off the highs of the day. But moving on then, the RBI's Monetary Policy Committee meeting is currently underway with the policy decision due tomorrow. A CNBC-TV18 poll is expecting status quo with the RBI maintaining its stance at withdrawal of accommodation. Ritu is here with more details. Ritu, over to you.
Well, this may be a bit of a wait-and-watch policy because it's squeezed in between the recently concluded Lok Sabha elections and the full budget that is only going to be presented in July. But more importantly, you have a strong growth print, inflation is still ruling above target, and the US Fed is not really itching to cut rates. So there's no real reason for RBI to move on rates just yet. And so this time around, what the markets are going to do is focus on other things like what the central bank says about, one, liquidity, because, systemic liquidity continues to remain in deficit, even though you have that government surplus cash balance as the elephant in the room. And the second one on inflation, because the last mile of disinflation is taking a tad longer than what was initially expected. But that said, no one is expecting, of course, any change in the repo rate. So a status quo policy for the 8th consecutive time, and no change in the stance, which is also likely to be left at withdrawal of withdrawal of accommodation. Now, none of the economists that we polled expect any change in stance before August, in fact, and the majority are expecting the first rate cut to only happen in October, or some even later. On the macro front, the inflation is expected to be left unchanged, the forecast that is, for the year at 4.5%. Now, keep in mind, inflation has been moderating at about 4.8% in April, and core inflation providing some comfort to the MPC, but the high food prices, they continue to remain a spot of bother. On the growth numbers, however, they're likely to be revised up from 7%. A majority of the respondents said it could be anywhere between 7 to 7.5%, but many are even expecting it to be left unchanged. The tone of the policy is expected to be absolutely even because there's no real change from the last time around. And finally, to end with what we started with on liquidity. Now, markets want to watch out for any measures RBI may introduce later to regulate the changes in liquidity from any passive inflows that come in from index inclusions. And of course, they expect RBI to continue managing liquidity through the main and fine-tuning operations as needed.
Ritu, thanks a lot for that. RBI Governor will be the one in focus tomorrow morning. But with that, it's a wrap on this edition of Business Lunch. Midcap Radar takes the action forward. From me and the team that put this show together, thank you so much for watching.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Hello and welcome to the CNBC-TV18 HDFC Sky Election Headquarters. I'm Sonal Bhutra and with me is Vivek Iyer. We are continuously getting in updates, more updates actually, on what's happening with the election outcome. So we are getting that for you. Meanwhile, the markets have come up from the highs, but we do have a lot of moving parts in the broader markets.
You're absolutely right. Quite a lot happening as far as the broader end of the markets are concerned. In fact, it's another day where we've seen strong gains, cooled off a little bit from the day's high, but strong gains nevertheless. An action-packed show for you. Let's start off with the top headlines. Market off morning highs, but stocks gain on expectations of the NDA's return and policy continuity despite coalition compulsions. PSU stocks lead the charge besides utilities, realty and capital goods. Midcaps outperform.
Minda up over 14% actually is adding on to those gains after it partners with an automotive company to strengthen electric four-wheeler product portfolio in India. Company will manufacture and sell high voltage category EV products for passenger and commercial vehicles.
Century Textile surges in trade after signing a JV with Barmalt India for luxury residential group housing project in Gurugram. The project offers a revenue potential of 5,000 crores for the company.
Positive commentary from Jefferies and housing financial companies like Aavas, Home First and Canfin Homes boost stocks. Brokerage says the new government at center may announce revamped affordable housing scheme in budget.
RVNL clocks in a new order win and NBCC snaps up orders of just under 500 crore. The wins and NDA's expected returns fuel optimism on capex. Meanwhile, IEX gains on the back of a good business update in May.
All right, those are the top headlines. Let's take a look at what the markets are doing right now. The Nifty is up 150 points, but remember it's around 140 points off from the day's high. It has been quite volatile in the last couple of trading minutes. And if we talk about the highs of the day, it was 22,910. So there's been some pullback from those levels. The Bank Nifty is the one which is underperforming. Yes, it is in the green, but it's underperforming the benchmarks, up around 0.3%. For a brief period, it slipped into the red as well, but it has recovered from those levels. The mid-caps, they continue to do well, 2% higher there. The advance decline ratio is solid in favor of the advances. In fact, on the NSE, the advance decline ratio is 7:1, and on the BSE, it's 3:1, and a lot of moving parts, a lot of news flow that's coming by, a lot of order wins in your space, and policy changes in the space that I track.
Well, order wins, policy changes for you, and operational updates from IEX. So space is entirely buzzing, the power, the gas, the utility space. But, just had a look at the screen a couple of minutes ago, and something very interesting popped up. On the day of the counting, we actually saw 7% and 8% downtick as far as the mid-cap and small-cap indices were concerned. And out of the 4 trading sessions in the week, one particular day itself saw a 7%, 8% downtick. But what's actually happened, post today's up move in the mid-cap and the small-cap, as well as the NSE 500 space, is that all of these indices have actually managed to go ahead and are now trading positive for the week gone by in these 4 trading sessions. Of course, we still have a day and a half yet to go, and today's expiry, so I expect more volatility in the second half as well. What's moved most this week as far as the NSE 500 is concerned? Some names, look at KNR Constructions, look at FMCG names like Imami, United Spirits, Credit Access. These are the stocks, that have done very well, up 10%. In fact, KNR up over 20%. Coming to the NSE mid-cap index, look at names like Max Healthcare, look at names like Supreme Industries. One particular stock that stands out is ABFRL, Sun TV, as well as Persistent Systems. Sun TV, of course, is linked to the election outcome. But we have a lot more stocks on the radar where Hormaz has been looking at the screen. This is our special segment, Mid-Cap Movers. Hormaz, take it away.
The good part of having so many stocks listed is you can say a few and I can say a few as well. So it's all even Stevens, and the broader markets are doing well, even though the benchmarks are struggling a little this afternoon. And I'll start off with the gainers from the broader market space, and you just highlighted Uno Minda. That is trading at a record high this afternoon. At one point it had even crossed the mark of 1,000 rupees. It's up 14%. KNR Constructions, as you just highlighted, is up 17%. Century Textiles another 12% today. Keynes Tech is up another 9%. So a good day for a lot of these stocks. But what were not having a good days were some defense PSUs. Even as the PSU space recovered a little yesterday, these 3 names were still taking it on the chin, were down almost 10% yesterday. But now there is some bit of recovery coming in for shipbuilders. Cochin Shipyard, Garden Reach up 10% each. Bharat Dynamics off the highs of the day, but still trading with gains of 5%. The broader PSU space continues to see recovery as we speak. BHEL, after the order win, is up 9%. REC IRCTC, HAL is doing well, as is PFC, but REC and PFC are still significantly off the highs that they had made earlier this week before that 25% sell-off on Tuesday. Stocks that are doing well from the real estate space, that is one sector that has been buzzing this afternoon as well. Brigade is up 10.5%, Macrotech off the day's high. Conversely to Brigade, which is at the day's high, Sobha is up 6%, as is Prestige Estates. Almost all constituents of the real estate index trading with gains. Stocks that are doing well on the back of strong volumes, and those include Avanti Feeds, the shrimp related stocks doing well, 8.5% higher for Avanti Feeds, Home First Finance, Eris Life and Devyani International. There was a small block deal as well that took place in the stock today. It's up 4.5% as well. And lastly, some stocks that are not doing well in today's trading session, bucking the trend. Sun TV, they had a good few days, now it's seeing some profit booking. Vijaya Diagnostics, Honasa Consumers and Avenue Supermarts, FMCG, the star of yesterday, now is seeing some profit booking after the rally. Back to you guys.
Okay, all right. That's a long and exhaustive list. Thank you so much for joining us, Hormaz. A lot of interesting movers in the broader markets that we've been seeing today. But it's a good time to get a technical check on the markets. Let's welcome Samit Chavan for just that. Samit, good afternoon. Thank you so much for joining us. Do you think we'll see more cuts now on the Nifty from the highs at least, because the last hour could be very crucial and volatile considering the weekly options expiry?
Good afternoon, Sonal. As far as index is concerned, in last couple of days we have seen a remarkable recovery from the lows of 21,300 that we had seen on the Tuesday election verdict day. Now going ahead, all the political developments over the next few days is likely to trigger some wild swings in the market. As far as levels are concerned, as of now we don't see Nifty surpassing 20,000 in a hurry. So probably it is likely to spend some time around this level. So the range would be slightly wider, despite the fact VIX has now fallen below 20 mark. But look at the kind of intraday swings that we are witnessing. So we expect the Nifty to now oscillate within the range of 23,000, 22,000, before it giving a decisive move in the either direction. As far as Bank Nifty is concerned, Bank Nifty has a strong resistance around 49,500 to 49,800, and as of now, there are no indications that Bank Nifty would surpass this important level. So for Bank Nifty, the range would be 49,700 on the higher side, and lower side there's a strong support around 48,000 to 47,800 now. So we expect some sort of volatility to continue in next few days also. So it would be stock specific movement that one has to track, and there are a lot of spaces like defensive spaces like IT. They are showing good traction, so one should keep focusing on such themes.
Samit, you spoke about individual stocks. You've also mentioned the IT space seeing a bit of a bounce back. Individual stocks, what's on your radar? What are your top picks for today?
So we have one buy and one sell. Buy, obviously, the IT space. From the IT space, TCS has been correcting off late from the levels of 39.50. It has tasted its lower end of its downward sloping channel around 3,600. Now it is showing some good traction in its counter. So we expect TCS to head towards 1,300, 1,320 over the next few days. It can be bought at current level, keeping a stop loss around 3,760. The short would be on Axis Bank. Axis Bank, after a decent correction on Tuesday, we have already seen a good recovery in this counter. Now it has reached its important resistance level. So one can short Axis Bank with a stop around 1198. One should keep a strict stop loss. The target to watch out for would be around 11.
Okay, all right. Thank you so much, Samit, for joining us today. Couple of more stocks that you should keep on your radar from the broader markets. Of course, Hormaz did speak about them. Marathon NextGen, that is a stock from the realty space which is up around 20%, locked in upper circuit. We also have India Pesticides. This is from the agrochemical space. This is one stock which hasn't been doing so well, but last two trading sessions it has been continuously locked in upper circuit. So that stock is up another 10% as we speak. So look at that. There's no fresh trigger that we have here, but yes, that's a 10% higher uptick that we are seeing on this one. We'll slip into a short break. When we come back, we'll get you more on the markets and stock specific actions, so stay tuned for that.
हमारे जो नेता है नरेंद्र मोदी जी के नाम पर ये चुनाव लड़ा है और उनकी जो क्रेडिबिलिटी है, उनकी जो गारंटी है, उन पर जो लोगों का विश्वास है, आज उसी का ही परिणाम है कि हम तीसरी बार जो है भारतीय जनता पार्टी जो है अपनी सरकार सेंटर में बनाने जा रही है और आप सबका आशीर्वाद हमें चाहिए। और ये साथ ही मैं अब जो है आपसे मिलती रहूँगी।
Welcome back to Midcap Radar. Well, one particular sector that's been underperforming lately, but today is seeing a bit of a bounce back, is the entire IT pack. So if you look at names like OFSS, Oracle Financial, if you look at names like Mastech, if you look at names like Wipro, Coforge, Persistent Systems, a lot of the mid-cap IT stocks today are actually giving a decent bounce from levels where they'd been sold off quite aggressively in the last couple of trading sessions. But one particular stock that's on our radar today is the BSE, which is the Bombay Stock Exchange. This is on the back of a news update. SEBI has formed an expert panel for clearing corporations. Sudarshan joins in with more details.
So first, talking about the news, SEBI this week has formed a panel led by former RBI Deputy Governor Usha Thorat to examine ownership structure and finances of clearing corporations. So first, talking about ownership structure, panel to suggest feasibility of broadening the list of eligible investors to take stake in clearing corporations. It will examine the need for altering caps on shareholding of entities, and alternatives should keep in view periodic capital needs of a clearing corporation. On finances, panel will suggest need for review of current structure of levying of clearing charges or fees and preparedness of clearing corporations to cover capital expenditure and investments. And currently, BSE owns 100% stake in its clearing arm, that is ICCL, which is known as Indian Clearing Corporation Limited. And in FY24, ICCL contributed 28% to BSE's revenue and almost 32% to profit before tax. And factoring all this, Jefferies has come out with a note. It maintains hold call with a target of rupees 3,100 per share. It says better pricing, market share in clearing can keep its margin high for a longer period, and it had recently adjusted Q4 growth in fees and clearing income to drive 1.3% EPS hike for FY25-27. So this is the reason BSE is in focus, and in today's trade, it's traded with a gain of almost 2%.
Okay, all right. That's about BSE. But Sudarshan, hold on. There is some focus on the back of some brokerage notes as well. Post the election outcome, CLSA is positive on capex plays, while Jefferies is talking about affordable housing maybe getting a boost. Tell us more about these.
So brokerage notes have started flowing in, and considering the new government formation, and it's related to sectors that new government may focus on and the sectors that can be amongst priorities in upcoming budget. So firstly, talking about CLSA on capex, it says channel checks suggest government's 100-day plan will hit the ground running, and its 100-day plan agenda, large orders may be identified to be placed across infra and defense names, and this large order placement would reassure investors and likely demand for more capex for two states, Andhra Pradesh and Bihar, may help increase state capex as well. And CLSA believes L&T, IRB, HAL, NCC, J. Kumar Infra will be key beneficiaries of increase in capex. Next is Jefferies on housing finance course. It expects government to announce revamped affordable housing scheme in upcoming budget, and revamped scheme could improve housing loan demand, especially affordable and mid-cap segment. And earlier affordable housing segment had contributed 48% of home firsts and 23% of Awas disbursements over FY18 to FY22. And large housing finance companies like LIC Housing and Canfin can also see tailwinds from the scheme if the loan cap in the new scheme is raised. Preferred picks for Jefferies are Home First and Awas in affordable segment, and LIC Housing Fin and Canfin in the mid-ticket segment.
Sudarshan, thank you so much for that. You've put the spotlight on the infrastructure space as well as the housing finance space. Very helpful. Now, the next stock on the radar is Orchid Pharma. It's received the DCGI approval for an API-backed TIM. Ekta joins us with more details.
Thanks for that. Well, yes, Orchid Pharma is in focus because the DCGI, which is basically the Drug Controller General of India, has approved the formulation for Emetizobactam along with cefepime. So basically, this particular drug is going to be used to treat severe infections which are otherwise drug resistant, such as treatment of UTIs, hospital-acquired pneumonia, and others. Now, remember that this is important news for Orchid because in Feb of 2024, they had announced that this was the first ever new chemical entity which was discovered by an Indian company to have received the US FDA nod. And they had outlicensed this drug long back to Allegra Therapeutics, which had then taken it finally to fruition. Now, the estimated global commercial peak sales are around $150 to $200 million. Annual royalties from Orchid, with the out-licensing agreement that they have with Allegra, should come to around $12 to $16 million. The size in India is estimated to be around 200 odd crores. Now, we did speak to the management. They did mention that it's currently approved for 3 indications. They want to be judicious about the use. So, for example, they don't want it to be used as a first line of treatment. That means that if in case you get a UTI or a hospital-based pneumonia, this is not going to be the first drug that will be administered to you. If in case the drugs which are first administered do not work on the patient, that is when they will use this particular drug, and hence they want to be judicious about it. Now, the DCGI has given approval based on what the global clinical trials have shown, and we do understand that phase 4 clinical trials have been asked for by the DCGI. So overall, it could be an opportunity for Orchid, but the scale-up is going to be something that the street will watch out for.
Okay, all right. 8% higher. It is actually at the day's high. Thank you so much, Ekta, for joining us with all those details. Moving on now, CG Power will foray into consumer business by selling appliances. That's the word coming in from Murugappa Group's Velayan Subaya. Speaking to Shireen Bhan from the sidelines of the EY World Entrepreneur Awards in Monte Carlo, where he's representing India, Subaya said that he was betting big on electric mobility and semiconductor business. However, he ruled out any acquisitions in the near future and bets on organic growth and partnerships.
A new business that we're adding, and that makes is the consumer business because a non-compete got over in 2021. So that continues to have a lot of opportunity. For the consumer business, we basically start with fans and pumps and kind of the more general electrical appliance areas, and then look at new areas for growth beyond that. So for the first couple of years, we'll just be establishing a beachhead in those areas, and then we start looking at what we can do from a growth perspective. Yes, so definitely, right now I don't see any more need for acquisitions in that space. So now we've got enough of a base knowledge and we will develop on it. We might have partnerships, but no more acquisitions is what I believe. So like you said, we've launched a 3-wheeler. We will launch a 55-ton electric truck. What we will also be doing over the next 6 to 9 months is launching a small commercial vehicle, starting with a 3.5-ton GVW and then looking at different payloads. And then we will also hopefully over the next 12 to 18 months launch our tractor. And I do believe that both those products have a larger propensity to move to electric. And so that's going to be our big bet. I think the semiconductor industry is really going to mushroom in India. I think there's a lot of potential for it. Just because of the raw horsepower we have in terms of intellectual capacity. Almost 20% of the world's semiconductor design engineers are Indian, right? So I do feel like that sector has tremendous potential in India, and it's a sector that I personally am again very, very optimistic about in terms of the opportunities for the country.
Okay, all right. It's time to put focus on some more stocks which are in the news. IEX is surging in trade. It's been a strong business update for the month of May. Vivek, give us more details. The stock has come slightly off the highs, but what are the internals looking like?
Well, first up, IEX is actually the short-term power exchange, and every month the company gives an update as to how exactly operations have panned out and how exactly have volumes panned out. So for the month of May, what's actually transpired is that the company has seen a very strong uptick as far as volumes are concerned. This is largely along expected lines given the fact that we had a very harsh summer, and typically during harsh summers, the kind of demand that is seen in the short-term power market is a lot higher. 29% uptick as far as total volumes are concerned. Now talking about the core electricity volumes, it was up 21%, coming in at the 9,568 million units mark. Now what's very interesting is that the day-ahead market price, typically, which goes higher along with the prices, this time around, it's come off quite significantly. So the DAM clearing price was at 5.3 rupees a unit. The company says that this is almost a 20% discount versus what are the typical bilateral contracts. So what the company intends to say is that it's a lot cheaper for discoms to go ahead and actually buy par from on the short-term par exchange, whereas doing it against a bilateral contract. Now the company says they expect to see further sell-side liquidity. There are government rules that indicate that surplus par should come onto the short-term exchanges, increasing fuel supply as well as higher availability of generating units, and this is why they like IEX.
All right, so that's not it actually. BHEL and NBCC, they are also buzzing in trade today. Tell us more, a lot of order wins coming through.
Well, that's right. So, every time we talk about BHEL, order wins are coming in thick and fast. India continues to have significant thermal capex outlay. And on the back of that, BHEL, right now, if you look at it, is one of the sole, in fact, it's the sole large thermal company that continues to make and supply for power plants. L&T at this point of time is not very aggressive in bidding. So now what's actually happened as far as BHEL is concerned is that overnight the company has informed the exchanges that they have received 2 orders. Now both of these orders are from Adani Power subsidiaries. One order is in the state of Uttar Pradesh where the company would be supplying equipment as well as O&M and this particular size of this order is over 3,500 crore. Now, the other order that the company has received is again in the state of Chhattisgarh, very similar internals, and the size there too is 3,500 crore. So, 7,000 crore worth of order wins is what the company has received, taking the order book over the 1.3 lakh crore mark. Now, talking about NBCC, again, order wins over there, 491 crores worth of order wins that the company has received, and this is in the routine course of business, is what the company is saying.
All right. Okay. So as we've been pointing out, it's a very busy day in terms of individual stocks which are buzzing around. But we'll do one thing. We'll slip into a short break. When we come back, we'll talk to you more about markets and stock-specific action on the other side. Stay tuned.
जो जिस तरह से हमारा प्लान है चीज़ें एग्जीक्यूट करने का और लॉन्च करने का वो हम डिस्कस करते रहेंगे। आप सब मीडिया बंधुओं का भी हमें जो है वो इसमें सहयोग चाहिए होगा और मंडी का जो है अब भविष्य जो है बहुत ही उज्जवल होगा। धन्यवाद।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups.
Welcome back. Well, a lot of action in the broader markets, and Century Textiles is one of them. The stock is up over 12%, and it is that real estate play despite it being a textile player as well. The company has announced that Birla Estates, which is the 100% subsidiary of Century Textiles, has entered into a joint venture with Barmalt India Private Limited. They will be developing 13.27 acre of land parcel for a luxury residential group housing in Gurugram. Remember, NCR as a market is seeing a lot of growth, is seeing a lot of attraction coming in from other players as well. So that continues to be the case here as well. Development potential of approximately 2.4 million square feet, and it has a revenue potential of around 5,000 crore rupees. So that is the number that the street really likes. Their expansion plans, especially in NCR, which is a growing real estate market right now. Remember, the stock is already up 67% in this year so far. So we'll see the expansion plans is something that the street continues to like.
Well, thank you so much for highlighting that. 67% in 2024, that's outstanding. And maybe the company will have to look at changing its name given the fact that it has so much of real estate assets now. But the other stock on the radar is Hindustan Aeronautics. It's buzzing in trade today after it inaugurated a facility to support ISRO programs. CLSA2 has issued a note on the stock. Upasna is here with more details.
ISRO chairman inaugurates HAL facilities to support LVM3 programs. Mind you, currently the existing capacity allows only 2 LVM3 launches per year. This facility will support the production of 6 LVM3 rockets per year. And mind you, post-election results, CLSA had written a note on defense sector wherein it has retained outperform rating on HAL with a target price of 4,731. It says that the expensive valuations leave little space for execution error. Company has also given a EBITDA margin guidance of 32 to 33% in next 2 years. And for FY25, the company is guiding for a order book of 47,000 crores, excluding the MRO division. As of 31st March 2024, the company's order book stands in excess of 94,000 crores, and company says that it is confident of maintaining FY24 growth momentum on the back of robust order book and strong order pipeline.
Thank you so much for that, Upasna, giving sense and making sense of how exactly HAL's prospects are. The next company on our radar is Minda. The stock is surging today, and this is on the back of its partnership that the company has announced with Silhau Innovance Automotive to go ahead and strengthen its electric four-wheeler portfolio. Earlier today, we spoke to Sunil Bora, the Group CFO of Minda, to discuss more on this development.
20% will definitely be a number, maybe 30 or 32, because what we see as of now, there are projections of 17% by 30, 20% by 30. Everybody has different assumptions, and that's why I said normally we don't comment on the penetration or the volumes. But yes, as we move forward, I'm sure market will see at some time 20% penetration as well. In terms of margins, I would say a little early to comment on, because as of now volumes are very less. But as we move forward, as we build scale, as we achieve those kind of revenues, we do expect the margins to be broadly in line with our average margins. But yes, they are as of now a little lower.
Well, a very interesting conversation there with Minda. Brokerages have been very upbeat on this particular development itself. Both Kotak Institutional Equities as well as Nomura believe that that is something that will do quite well for the company going forward. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.
Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com.
I'm in a very totally ecstatic mode now, because what was so very impossible has become gloriously possible. And it's definitely blessings from my grandparents who worked up to having the Janasangh during 30s. They were working then. And the kind of pains and travels that they had to go through, all that is getting paid now. It's a tribute to them as well.
Hello and welcome to CNBC TV18 HDFC Sky Election Headquarters. You're watching MF Corner and I'm Sonal Bhutra in the Mumbai studio. Today we'll put the spotlight on exchange-traded funds or ETFs in this episode for our viewers. The flows in this category for the assets under management stand at 4.89 lakh crore rupees. But you know, this is a category which is little difficult or sometimes it needs extra expert advice to understand as well. How does it differ from regular mutual funds? What are some of the costs or the other aspects that you should be aware of as well? Let's get in Feroz Aziz, Deputy Chief Executive Officer at Anand Rathi Well, to decode that for us, because there are a lot of nitty-gritties in this particular asset class as well. Feroz, good afternoon. Thank you so much for joining us. And we've had some conversation about it off air as well. But let's start with the basics first up and try and understand how is the ETF index constructed. What is the identification of constituents here?
Yes, Sonal, like you rightly pointed out, ETFs and index funds could be complex as well. They seem very simple, but there is some degree of complexity. First, an index fund is let me just describe for the viewers' benefit. An index fund is a fund which aspires to mirror an index. An index is nothing but a platter of stocks or combinations of stocks which have come together to form an index. So a fund which tries to mirror that performance is called an index fund. Now, what's an exchange-traded fund? Exchange-traded funds of an index is nothing but a fund which is going to mirror the index, but you can buy and sell on the exchange, not with the asset management company. That's called an exchange-traded fund. Exchange-traded funds and index funds, from an objective standpoint, try and achieve the same objective to mirror a passive index. So in this, the great part is, from an optical standpoint, there's no fund manager, there's no human discretion. In turn, there is a lower cost. So these two ETFs and index funds are getting popular in India as well. Globally, they're very popular. In India, if you look at it, close to about 6 lakh crores is there in these two asset classes or product lines, as we would rightly want to call them.
Okay, very interesting. So that is the difference between, say, a mutual fund and ETFs. And we also will discuss why is it not so popular in India. Of course, it is heating up. But other than that, the other aspects as well. But tell us, Feroz, does investing in the benchmark make sense then? How do you look at investment in this particular category?
You see, I personally, after having done a lot of study of how US capital markets behave, how Indian capital markets behave, for all our clients, I have never bought myself or my clients an index fund. Of course, it's quite a counterintuitive thing because that seems to be the trend today because it's low cost. Now, if you look at how the ETF industry is growing, let's throw some light on which are the most popular indices which people love to invest in. So 92% of this 4,89,000 crores, which is the ETF assets under management, is in two indices. Rightly so, which is Nifty and Sensex, because these are the most popular and prominent indices available in India. The third largest index, which is popular in the ETF market, is the bank ETF. So that takes about 6%. So if you look at these three indices put together, is close to about 98% of the total ETF AUM. The reason why I'm actually throwing some color on the industry is for a viewer to see which are the popular indices which a person is or the other herd is ending up buying. Now coming to the point, Sonal, do these make sense? To my mind, if I have to give you an Indian context, India is a reasonably new market. We were doing a study because Warren Buffett propagates index funds and passive funds. So we have to take that suggestion seriously because he's one of the world's greatest investors. And he actually says that just buy index funds or ETFs. So we as a wealth management outfit can't discount such a credible source of information. So we did a study to find out the age difference between the US capital markets and Indian capital markets. We realized that there's a 60-year difference mathematically as per our computations. That means India is still a reasonably immature market. That's why there is a possibility to beat an index very easily in India. So we think that index funds and ETFs, there's a long way to go in India, another 5-10 years. Active fund management can create value, mathematically establishable. But like you said, Sonal, quite a few people buy index funds, but they don't understand how indices are being formed. How is the Midcap 150? Which are those 150 stocks which NSE is choosing for you? How is that formed is something which I think a lot of our viewers should know before they invest in these.
So let me get a follow-up on that itself. You spoke about the other indices. Let's talk about NSE 500 itself, right? Because it says it is the 500 top companies in that particular index, but there are some which are not the constituents of that particular index. What explains that?
Yes, Sonal, this is a brilliant question. And like you rightly said, NSE 500. Why is this very important an index? You may never invest in an NSE 500 ETF. But if you've bought a mutual fund in India, this becomes a very important index for you. This NSE 500, which is as per NSE's website, I quote, it is the top 500 companies as per total market cap from an eligible universe. That's what NSE's website today reads. But these 500 companies are then further broken down into 3 subgroups. The top 100 are called NSE large cap, which is what large cap fund managers are expected to beat. That's their benchmark. The subsequent 150 is called the mid cap, and the last 250 is called the small cap. And every fund manager has been given this as their tier 1 benchmark if they are in the large, mid, and small cap. Now comes to Sonal, your pointed question. I was very surprised to see close to 30 companies which were greater than 10,000 crores in market cap, and they were not a part of NSE 500. Whereas NSE 500's smallest constituent today is 4,800 crores. So I was very surprised. If the smallest constituent is 4,800 crores, that automatically implies that 10,000 crore companies should have made the cut. But there are close to about 25, 30 even today who are not a part of 10,000, are not a part of NSE 500. Because there are 2 tricky, very tricky rules in NSE 500. Those are very tricky. I'm calling them tricky because of those 2 rules, several companies which are greater than the smallest constituents have been kept out for long periods of time. What are those rules? If you have to be in NSE 500, you have to not just beat the 500th company, you have to beat the 350th company. Let me read the rule as per NSE. A company must be among the top 350 in terms of total market cap to be included in NSE 500. It of course perplexed me because I always believed to get into 500, you have to be 499th. But this rule says that you have to be better than 350th to be a part of 500. The second tricky rule, again I read verbatim, a company if falls to the rank below 800 in terms of total market cap would be excluded from the index. That means to enter 500, you have to be better than 350. And to be thrown out of 500, you have to be worse off than 800. And the 350th company is a 15,000 crore market cap, give or take. And the 800th company is a 1,000 crore market cap. Unless a company falls from 15,000 crore market cap to as little as 1,000 crore market cap, give or take, it will not be excluded. So these 2 rules are the tricky ones. That's why, Sonal, your question is very valid. There are so many large companies, larger than the 500, which are part of it, but they still remain outside. And several such companies. MSCI, which is the Morgan Stanley emerging, which is an index provider globally, has about 460 stocks in a small cap portfolio. But an Indian fund manager only has 250 stocks in the small cap portfolio. There's a lot desired in the way we construct our indices in India. There's a lot of learning hidden from the global side, like MSCI has 460 odd stocks in small cap. And the domestic guys who sit in India have only 250 stocks in the small cap. NSE 500 covers only 91.8% of the market cap. But MSCI's large, mid, and small covers 99% of India's market cap. So So an index fund manager index fund investor should do a lot more study and not just blindly follow an ETF strategy without understanding how the portfolios are created.
I think we'll have to have another complete different long episode on that discussion as well, right? Because this has brought about a lot more questions on index funds, the construction and other aspects as well. But thank you so much for shedding light on how this particular index, at least NSE 500, is constructed. And you're right, it's quite tricky. But let's continue with our discussion on ETFs after understanding this one. There was a big inflow in India ETF one day before election results, Firoz. Is there an expectation of flows tapering off now? What did you make of those incoming flows?
Sonal, if you break down the ownership of ETF, okay, people may outside the industry not know, the largest owner of ETFs is the EPFO, Employee Provident Fund organization, right? So our monies which go as a deduction in the EPFO get an allocation of equity. So ETF owners, so any large flows, you can attribute it to institutional participation because EPFO, if I know that number correctly, pardon me if it is marginally incorrect, 15% allocation is what they had decided to put into equity. And that's why a reasonable portion of this 4,89,000 crores is owned by the EPFO. And that's why you see Nifty and Sensex queuing that number. So I would not read too much to answer your pointed question with that inflow. That would just be an allocation which would have come from some institutions.
Okay, all right. And we anyway saw so much exuberance just one day before the election results. So this was just a part of that. Firoz, it's a very interesting chat, but we have to take a quick break. On the other side, we'll come back and continue with our discussion with Firoz on investing in ETFs and a lot more. Stay tuned for that. Welcome back to MF Corner. We still have with us Firoz Aziz of Anand Rathi Wealth. We are talking about investing in ETFs and busting some myths as well with him about index formation and other aspects. Firoz, suppose one investor is looking at investing in ETFs. What are some of the factors to be kept in mind and how would it differ from mutual funds?
Yes, one factor to keep in mind is that you should not have a fair expectation from an ETF. Because there are expenses, so there will always be a negative return relative to the index. Like last year, 2024, the benchmark was underperformed by the ETF industry. Alpha was minus 0.74 because there's going to be expense there's going to be very difficult for you to buy a 250 stocks if you are looking at a NSE small cap 250 index funds. So you should have a fair expectation from the institution that you will underperform the index by 0.5%. Quite a few index fund investors say, why is there an underperformance of 0.5%? So you're sure to underperform marginally. That's also called because of the tracking error, because it's very difficult to mirror an index exactly precisely. And secondly, there's also going to be some expenses. That's one thing you have to keep in mind. Second, when you're buying index funds, if you really are wanting to buy index and ETF, stick to large cap category, because there's so much alpha possibility in the active management. Like, for example, Anand Rathi ran a model portfolio for the last 11 years, and we've beaten Nifty by 182%, right? But in the large cap category, beating Nifty is so difficult. So if you're really keen to buy an ETF, have active management for small and mid cap and other categories. For large cap, you may not want to buy a large cap fund. For 10-20% of your portfolio, you can surely buy a Nifty index fund, because there the cost is lower and the chance that a large cap fund manager beats an index is lower. Of course, there is a Sandeep Tandon kind of quant which has beaten Nifty by 28% in the large cap category last year. But if you want to buy an ETF, best ETF to start with is the large cap category. So these are the two small suggestions I would want to make to the viewer, Sonal. And I would like to keep my answers brief. Sorry, I've gone a lot of the previous segment.
No, those are perfect answers, and that is helping our viewers for sure. But Feroz, you spoke about some returns. You spoke about what an investor should look at when they're investing in ETFs. But what are some of the other fundamental differences between mutual funds and ETFs? You spoke about transaction costs. The management style, does that change as well? Are there the price variations that you would like to talk about?
You see, when you buy a index ETF or sell an ETF, for a Nifty ETF, you lose 36 points as transaction cost in an ETF on buying and selling on the exchange, because the STT is larger. In an index fund, for example, the cost is only 3 rupees to buy and sell. All else equal, per Nifty, you spend 3 rupees in an index fund, you spend approximately 36-40 rupees in an ETF. This, I have done numerical computations from a treasury standpoint. This is very, very important. But for an investor, it's not too much of a difference. But ETFs have a larger STT than an index fund. That's one thing which is a fine print. You may never get to know unless you read those big fat books of Kim. But that's one thing which is very critical. And active managed funds, I think, are also popular. There are 150 odd fund managers in India which can beat. But I think ETF is an instrument which you buy and sell on the exchange. So you can have different NAVs during the full day. In a mutual fund, you will, or an active or an index fund, you will have only one price per day. But in an ETF, if you bought it in the morning, the price could be different. And if the market fell and then you bought it later, the price could be different. For example, let's go 2 days behind, which is 4th June. The Nifty opened at 23,000, close to 23,000, went to 21,250, and then closed at somewhere around 21,900. In this whole day, an ETF buyer could have one ETF buyer could have bought it almost 5% more expensive than another ETF buyer. But a mutual fund investor, all of them buying the same mutual fund would have got the same price. This is one of the most important differential. If you're a savvy investor, an ETF can give you different prices during the day, and you could probably time your investment better depending on your requirement.
And a lot of mutual fund investors would have thought, I wish my SIP deduction date was just today, on the 4th of June at least, to get that better NAV as well. But you know, Feroz, in ETFs, price discovery has been a problem. Do you think that, be it equity, debt or gold ETFs, as they're not as liquid and not as popular in the country, how can an investor navigate that issue?
So for an investor and a viewer, I don't think it's too much of a difficulty, because there's also a liquidity manager which is there. Now, let's assume in the treasury, if we bought 500 crores of ETFs and I want to liquidate it, then it is a difficulty. Absolutely larger amounts. Market making is still a practice, which is a reasonable responsibility of the asset management company. For 25 crore plus tickets, you can straight place an order with the AMC itself. So I personally think that for a retail investor, price discovery, or at least a market making, can definitely be better. Sonal, your point is very valid, but the price is not going to be too different. But yeah, I think there's a lot desired in terms of efficient market making for lower bid-offer spreads in ETFs in India.
Yeah, I think we need a lot more discussion and a lot more awareness as well about this product, right? We spoke about certain misconception that people had already when it comes to index formation and ETFs. But let's talk about the other asset class within ETFs. Should people invest in gold through the mutual fund or the ETF route? And for those who want to pure play invest in gold, should they choose a gold ETF or a gold fund?
I would say gold ETF is better for a person who has lump sum money. For a person who wants to do a systematic investment plan, ETF is not an alternative at all. So gold funds is nothing but a group of ETFs packed into one. So gold fund and a gold ETF will largely depend on the viewer or the investor's status of his capital. If he wants to do a recurring investment, he's left with gold fund as a choice. If he has a lump sum 1 lakh to allocate, he can definitely choose an ETF.
Okay, all right, makes sense. We spoke in detail about ETFs, spoke in detail about index funds as well, but it boils down to one thing. Because we saw so much volatility, a lot of investors would have seen such a crash for the first time. Somebody who entered the market after 2020, the Gen Z investors as well, right? What should an investor do with the SIPs when markets have fallen so much or there's so much volatility? Do they change the amount they're investing or they change the timing, like, change dates? Some people actually think investing on a certain date would also help.
Yes. So, Sonal, I think there are two kinds of individual investors. One who have chosen the mutual fund route, the one who have chosen the stock route. If somebody has taken a stock route, of course, the number of demat accounts is a reasonable proxy to say a lot of Gen Zs want to participate in stocks directly. They have seen one of the largest jolts of volatility. And because they've not seen even one election, now from 99, I've probably 2004, I've seen general elections. So this is very normal volatility for a general election. Right? I was always telling that the India VIX is so low, it is ridiculously low, and I predicted that it will touch 30 on the election day. It did touch 31, because if you look at election days, those are. So point one, if you are an investor, if you're in a mutual fund, ride this volatility. This volatility is a great volatility to have. Right? India has thrown up lower volatility than even the US S&P 500. And these one or two jolts will help you calibrate your expectation from equity market, point one. Point two, to a new investor, I would definitely want to remind him that every year, once or twice, market always shows 10% fall. In the last 21, 22 years, market has shown 50 times a 10% correction from peak to trough. If that's the nature of the beast, is why you get twice more than the FD return or thrice more than the FD return. So live with the volatility. That's the reason why you deserve 2 times more than an FD return or 3 times more. Don't hate it. If markets become lower volatility, the returns will also become lower. Right? So that's point two. Point three, if you're a stock investor, this is a great wake-up call. Because if Nifty can, in this term of the new government, deliver 11, 12%, good funds can deliver 14, 15, 16%, which is good return. So I think I would definitely tell the other group, which is thinking that I can do stocks myself with change in price 10%. On the election day, I saw the biggest names with 1 lakh crore market cap with minus 15, minus 18%. But I didn't see a mutual fund fall more than 5, 7, 6%. So I would say, please move from one camp of direct equity to mutual fund with this experience of the volatility if this was your first
The
time.
diversification helps you there, right? So if a stock is falling 15%, maybe in your portfolio it wouldn't if you have other stocks as well. What exactly in that case is systematic withdrawal plan, Feroz? We always talk about SIP, but how can an investor go about SWP?
Yes. Sonal, with your mutual fund understanding, I think you are an expert yourself to give your viewers. But yeah, I'll try and attempt in an uncomplicated fashion. See, there is a need of money to be utilized. People who are individual investors, they have a need, is why they save. They have goals. When goals are getting closer, and if they are recurring goals, like you want to create a retirement plan for your parents, then systematic withdrawal plan is nothing but an instruction to an asset management company, a standing instruction to an asset management company to credit on a specific date of a month amount from your mutual fund account. That's called a systematic withdrawal plan. The great part about a systematic withdrawal plan is its consistency and predictability. Second, its discipline, that you're selling not too much, not too little on a specific day. You're selling it in a staggered fashion. The third and the most important advantage is it's going to be tax efficient. Whenever you get a dividend, for example, from a stock, the entire amount which gets credited to your bank account is taxable. In a stock, if you got a dividend of 100 rupees, the entire 100 rupees has to be offered for tax this year, right? Okay. If you got 100 rupees from a systematic withdrawal plan, there is also a capital component and there is a return component. The capital component, there's no tax for that bank account credit which you got. Let's assume you got 100 rupees in systematic withdrawal plan. 20 rupees is your gain, 80 rupees is your capital. The tax to be paid is on the 20 and not the full 100.
Okay.
Just like an EMI, you pay a banker where you are giving interest and your capital repayment. Similarly, systematic withdrawal plan is an opposite of an EMI which you end up paying to a bank.
Okay, all right. That's a very helpful explanation as well. Always a pleasure speaking with you, Feroz. Thank you so much for joining us today on this interesting discussion. With that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to
It is a fairly good start in the Asia Pacific.
For now, the NDA camp seems united as far as the current letter of support is concerned.
So the Nifty now needs to decisively close about 22,640. We're there. It's 20 points away.
Maybe taking some money off the table may not be such a bad thing.
100 plus on the Nifty, so 98, 86, tracking there.
The next 12 to 18 months, a lot of resources could be diverted to spur consumption.
A lot of our customers are maybe importing or maybe working to see how we localize.
Because we are assuming still broad macro policy continuity, which we are happy to continue with.
And the markets continue to roar, they're shining green.
We've constantly added new businesses and shifted our mix between existing businesses.
There's no real reason for RBI to move on rates just yet.
So in totality, the opportunity to add 300-400 stores is very comfortable.
A lot of key meetings taking place in the national capital.
They've come up from the highs, but we do have a lot of moving parts in the broader market.
sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that's the day so far, and it's once again a pretty exciting day with so much happening, a very vibrant screen all through from the word go this morning. We are coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Surabhi here, Nigel joining in from the newsroom floor. Guys, hi, good afternoon.
Good afternoon.
Hi, afternoon. In the green, but now off the session highs now. So the Nifty's lost about 200 points from the top. We managed to cross that 22,900 mark early in the morning. But now we're hovering around 22,700.
But for what it's worth, I mean, it's been a good recovery and an interesting texture of stocks once again that has been moving higher pretty much throughout the day.
You know, the rotation continues, right? Rotation into FMCG, rotation out of FMCG. And today it is a rotation out of FMCG. So the rotation was for 2 days. And this is what was, you know, we were talking about yesterday as well, that it seemed more like a sort of run to safety. You know, find a hiding place more than any great real expectation that this is going to be a big consumer-led sort of market now. At least that's the sense that we got. But look at the market itself, right? 80 points higher, which means we are off, what, 170 points off the highs? But it's still got 80 points on it, 85, 86 points. And this is the second sort of swing that big swing that we're seeing for the day so far, holding its head above the 22,700 level even as we speak. Just a few other points before I sort of go any further. As I said, the recovery, of course, continues, but there is profit taking, which is kicking in at higher levels, basically. What is doing well? It's a combination of real estate. Real estate actually is the top performing index. PSCs, the public sector index, is once again up. I mean, I think the last I checked, 2.5%, actually more, close to 3%. What is taking a backseat is FMCG. I think it's one of the few indices along with the private bank index which is in the red. And nothing large, but 0.5%, 0.6% in that, actually a little more now, almost 1% of the FMCG index there. And IT is doing better. I mean, the IT services index, you know, have you heard anyone talk about IT services lately? No, except maybe Reema, right? But, you know, 2 days in a row from the lows of Tuesday, I think it staged a decent move. And we'll sort of discuss this as well as we go along. That's a Nifty for you. Up, but also down a little bit. So, I mean, I think it depends on how you look at it and where you really got in. Reema.
Well, the Nifty Bank has just dipped into the red now. So you've got the first red tick coming through on the Nifty Bank. Let's pull that up. It had dipped into the red about 115, managed to recover, and now that's been sold off. From the day's high, the Nifty Bank is off by nearly 650 points. So banks are a bit under pressure. It's IndusInd Bank, one of the big movers yesterday, which has seen a bit of a correction. Axis Bank is down 1.5%. ICICI Bank is down 1.5% too. HDFC Bank is managing to hold its head up in the green, flat, but at least it's got a green tick. So the top Nifty gainer today is an IT stock. It's HCL Tech with a 3.5% gain, but even a Tech Mahindra and Infosys, both of them are up more than 2.5%. Outside of the index, many of the stocks which are perceived beneficiaries of the political mandate, they continue to rise. So Heritage Food, another 10% up. You've got KCP, 9.5% higher on that. Uno Minda, where there is some news today, that stock has gained close to about 15%. And then some infrastructure construction names like KNR, PNC Infrastructure. These are stocks which are showing you double-digit gains.
Absolutely. I mean, it's a very vibrant looking mid-cap screen, actually, you'd have to say, right throughout the session. Even though the headline index, the Nifty is dipped, the Bank Nifty is negative, the advance decline ratio has been very positive. We still have over 2,000 stocks that are advancing at this point in time. And PSUs are retaining a lot of their mojo. I mean, it's pretty much down to the last hour now. But still, look at a BHEL about 9% higher, Mazgaon Dock about 11%, Cochin Shipyard, Garden Reach Shipbuilders. A lot of these PSUs still looking at double-digit gains. Beyond PSUs, some interesting names in the mid-cap arena would be, let's say, a Nippon Life, 10% higher on that stock. Cairns is up about 10%. We have stocks like Signature Global, 8-9% higher. So basically, there's plenty of flair in the mid-cap market. That is the short point. But index, Nigel, let's see. Let's see if it can go home with this 100 point or whether we're going to give that up by the end of the day.
Well, that's right. Should be at the start of today when we do that morning chat, I said that, the market is not for the faint-hearted. So today we have moved in a broad 300-point range. But if you wanted, at the gap up opening itself, which was around 150 points, you could have taken some money off the table and you would have been packed up. That's and as of now, the Nifty is up close to 100 points. So bang in line with that. Let's see how we end, because we'll have the weekly expiry factor as well that plays out. But this market's not for the faint-hearted. We have seen big moves in today's trading session. The Nifty Bank would have thought that's in the red. It was up more than 600 points earlier in the trading session. A couple of stocks that I'm looking at, Naval Limited, well, that one is up close to around 15%. I was looking at the EPS for the last year, it was close to around 65 rupees. So that one, in fact, is trading at sub 10 times. And last year it had a big debt in its books, which has come down to zilch. So that's one of the stocks that's on your radar as we speak. One of the top volume movers in today's trade. Just thought we'll highlight that one out. How do you position yourself for the final lot of trade? Mitesh Thakkar is back with us. Mitesh, that's sort of a seesaw day, right? Market's holding at around 22,700 odd. But we started the day at around 22,750. So someone who bought the gap up actually is not making much money. What's your view?
Good afternoon, Rajan. So I think, earlier in the day, the view was that we might find a supply around 22,900, 950 zone. We got a high of around 22,910. And I think that will define the upper ceiling. I'm yet to find the lower ceiling purely because of the lower, area, purely because of the fact that the market is extremely choppy. But my initial understanding tells me that, it could be as good as 22,500 to about 22,450 zone. So we might just chop around in this range, given the fact that the market doesn't seem poised for a big decline. It could be, settling down and, we'll see the volatility shrink, because on the intraday basis, I've seen the volatility indicators start to turn negative, and on the lower side, and you would have seen that the VIX also has crashed in the last 1-2 days. So I think that's what we are going through. So as I said, it could be 22,950 to about 22,450, 500 on the lower side, and trading should be stock specific. We had highlighted earlier FMCG, auto, and IT names. I think IT was early today in the morning. I think that still remains the space where a lot of action is happening. I have a buy of a Tech Mahindra right now. Buy here to stop at about 1285 and a target of 1360, 1365 can be looked at. And the other stock on the recommendation list, is LTI Mindtree, which I would recommend buying now with the stock just below levels of 4,720. A target of 4880 is what I'm looking at.
Okay, all right. Thanks very much, Mitesh, for that. We'll sort of come back to you, but look at the good news at the bottom of the screen. Monsoon to cover parts of Maharashtra into Mumbai in the next 3 to 4 days. Oh boy, I mean, it's going to be relief, actual relief, right?
Because and until you get on the roads,
exactly. So that's what I was going to say. At least for the first couple of days, we won't, crib about it. We'll enjoy the rains and the showers. Nigel, what about you? Nigel already had a brief, a precursor yesterday.
No, I was drenched yesterday, so to call it. But yeah, I mean, looking forward to the monsoons. I thought today actually we were in for some rains, but doesn't look like. I mean, at around 1:30 p.m. I stepped out. It's not today.
No, I think it was in the morning. I saw a little bit of rain.
Yes.
But very light showers. So hopefully we'll get the proper stuff now, right? I mean, we'll over the next 3-4 days. That's essentially what the Met is saying. But let's. Sorry, Nigel, go on.
What goes with the first rains? I mean, when it
Nigel,
rains,
that's Friday. That's Friday topic. That's for tomorrow. We'll discuss.
Some nice samosas, some I don't know what Surbhi's thing. I was thinking some pakoda, some nice garam chai.
Hot tea.
Yeah, hot tea, exactly. Surbhi, I think, is already in Friday mode. She's thinking about the wine, and I think, let's get back to the market.
Okay, guys, back to the market. Yeah, we have a trading market right now, so back to it. We've got a lot of these PSU stocks that have been buzzing around, so let's just focus on them and then discuss that with our experts as well. Now, HAL is up and about. Not only, obviously, is the whole PSU flavor and fervor back for what it's worth today, there's some news around the company as well. HAL inaugurated a facility to support ISRO programs. So that's one aspect of it. And then CLSA came out with a note sounding a little upbeat on some of these PSUs as well. Upasna has more details. Upasna.
ISRO chairman inaugurates HAL facilities to support LVM-3 programs. Mind you, currently the existing capacity allows only 2 LVM-3 launches per year. This facility will support the production of 6 LVM-3 rockets per year. And mind you, post-election results, CLSA had written a note on defense sector wherein it has retained outperform rating on HAL with a target price of 4,731. It says that the expensive valuations leave little space for execution error. Company has also given a EBITDA margin guidance of 32 to 33% in next 2 years. And for FY25, the company is guiding for a order book of 47,000 crores, excluding the MRO division. As of 31st March 2024, the company's order book stands in excess of 94,000 crores, and company says that it is confident of maintaining FY24 growth momentum on the back of robust order book and strong order pipeline.
Hemang Jani is now with us on the show. Hemang, afternoon. First, your quick thoughts on your conversation with investors, what they've made of the week so far. It's been 4 days, but it feels like a lifetime, and we've seen some wild swings. Markets have been whiplashed. So what's the conversation? Is money going to pour in with the mandate that we have, and then come in on HAL and defense, and what investors should do now?
Yeah, good afternoon. I think very volatile days, and what kind of movement we saw on the exit poll day, and more so when the final results were out. I think the fact of the matter is that the IVs and the swings were massive. So I think traders were a little jittery as to what's really happening, and what if BJP does not get the required number. But having said that, I think when we look at a larger spectrum of investors, many people were actually looking to buy into the dip, and many phone calls were there as to what one should really be buying into at this point of time. So I don't see investors actually panicking by and large, and they're looking out for opportunities, and more importantly, from the pockets which have really gone down significantly in any sectoral rotation that one can really look at. So from an overall perspective, we think that now that market has come to terms with the fact that you will have a coalition government, the focus has shifted to what kind of sectors and themes one can participate in. And from that perspective, I think 2 or 3 things are emerging. One is, of course, the consumption rural-based theme. Other thing is that IT as a sector is seeing initial signs of bounce back. And we do think that given the way US markets is shaping up, and the way the valuations are looking, it would be a good pocket to look at.
Okay, so that's a sense on some of these IT stocks. Let's take a look at some more movers and shakers. Of course, all the FMCG names have cooled off quite a bit, but as have the banks. Most of the large ones are lower down the order today. Hemang, hi, thanks for being with us. Good to have you on the show. So I think the big debate has been whether this FMCG move was just a knee-jerk one, or whether you really need to increase the allocation, and if so, by how much. So tell us, I mean, in a portfolio right now, what percentage sort of exposure would you recommend to FMCG? And then give us your top 2-3 picks as well here. FMCG/consumer, let me broaden the scope.
Yeah, so 2-3 points I would like to highlight. So one is that it's not as if that only, let's say, last couple of days we are seeing action. If you see maybe, a month back also, when during the con call, some of the companies did indicate that they are seeing, recovery in the rural spend, and the overall volume growth could look better. Particularly, companies like Marico, etc. So there is a sense that you might see a bit of a revival, and particularly when you have monsoon, which are going to be out, let's say, in the next few days, coupled with the fact that the government may also try to do something for, reviving the rural consumption, and, because the election results are telling you that they need to do something. So that would create some sort of interest for the FMCG stocks. We like something like Tata Consumer, we like ITC, and to some extent Marico.
Okay. What about the two-wheeler theme? Based on expectation that there will be a rural revival, some thrust from the government to spur spending over there, consumption, income will perhaps go in the hands of people. Would you bet on two-wheelers, and how do the valuations stack up right now?
Oh, absolutely. I think two-wheeler has been outlier if you see last almost about 1 year now. Even the recent data point, last month, the growth was 25%. So if you are looking at a revival in the rural economy, better monsoon, some support from the government, Surely, I think this is going to be the big sector to look out for. I would go with something like Eicher and Bajaj. These are the two names that I would go with. No doubt, valuation-wise, because of the run-up that we've seen, they're not looking very cheap. But I think as a theme and particularly with the growth visibility that they are offering, I would surely go with it.
All right, Hemang, I request you to stay with us. Let's focus on a couple of stocks that are reacting to news updates that came in overnight. Senshi Textiles, that's flying away in trade after they talk about development of land in Gurugram. Sonal joins us to tell us what's going on there. Sonal.
Well, Century Textiles wholly owned subsidiary, that is Birla Estates, has entered into a joint venture which is with Barmalt India Private Limited. They will be developing around 13.27 acre of land parcel for a luxury residential group housing in Gurugram under this particular joint venture. The development potential is approximately 2.4 million square feet and it will offer them a revenue potential of up to 5,000 crore rupees. And remember, NCR is a region where a lot of new developers are entering. They're not new here, but of course they're expanding their footprint in the NCR region as well. Remember, the stock is up 67% in last 6 months itself and adding on to some gains. So Street likes the expansion plans that they have in the NCR region.
Thanks a lot for that, Sonal. Well, Hemang, what do you make of this one? I think in the past we have chatted about Brokerage properties, but Senshi Textiles, what do you make of this piece of news and what's your preference in the real estate pack?
I think if you look at the kind of revenue that they're talking about and the land parcel that they are sitting on, there is a sense that the actual monetization can be much more than what the market is pricing in terms of intrinsic value right now. So I think there is a massive re-rating that one can really expect when it comes to some of the real estate companies, particularly Century, Signature Global. Also, I think the stock is up. And they're sitting on a huge land parcel and the market is not pricing in the current, real estate market that they are, getting at this point of time. So I would certainly go with, Century, even though it has gone up. I think there is a case for a 30-40% kind of an upside. Also, some of the Bangalore-based companies, Brigade, Prestige, we do see a case of some sort of uptick over there also.
Okay. Century Textiles definitely in focus because of that expansion that they're looking at in the Gurgaon market in real estate. Hemang, last couple of days have been all about trying to spot Andhra stocks, right? Stocks that can benefit either through some sort of a direct political connect or maybe because of more progressive policies in the state. Nigel's been telling us about KCP, for instance. Anything on your radar? And would you, I mean, even though this might not be long-term fundamentals, but just in terms of momentum or riding the current wave, would you look at anything?
Yeah, I think all of a sudden people have started kind of looking at Andhra-based companies and we're seeing a fair bit of momentum there. So I think something like a Sagar Cement, NCC, NCL Industries, I think these are some of the companies that one can look at because typically when you see such a big political change, some companies tend to benefit and that is how the markets are reacting to. So I think Sagar Cement in particular is looking quite interesting because the valuation wise also it is cheap and we think that you will see good volume based growth over there.
And what about something like Amara Raja? I mean, there's been so much chatter about more direct political connects, right? In the promoter family and just general sort of equations over there. How would you look at that stock?
Currently, Amara Raja seems to be in a sweet spot because the core business, the automotive battery and industrial battery is doing well. On the EV side, they've lined up with a big MNC company, and you have political equations which are favorable. So I think surely Amara Raja would be one of the stocks that one can look at. The only issue here is that the stock has run up so much that you really want to enter in maybe 2 or 3 parts rather than just committing at one go. But surely Amara Raja is something that one would really want to have in the portfolio as a part of the small allocation stock.
Okay, all right. Hemang, if I heard you correctly, you spoke about NCC, KCP and Sagar Cement, right? The 3 cement companies. Hemang?
Nigel, I missed your question.
Yeah, so I think you spoke about 3 cement companies, right? Sagar Cement, NCL as well as KCP. because of the development of Amravati, if I got that correct.
Yeah, I talked about NCC, which is a construction company.
NCC, got it.
NCC. And there is a small cement company, Nigel, NCL Industries, which also is Andhra based, and it is 40-50% cheaper to some of the mid-cap cement companies.
Right, Hemang. I recall when Mr. Nadu was in power around 5 years ago as well, these same companies were in focus at that point of time. So let's see what's the Amravati capital plan that's laid out. Wanted to ask you about these power financiers as well. REC, PFC, they have been big actually value creators, but from the top they've fallen quite a bit. Some believe still valuation wise there is support. Your take?
I would be very selective here now that the entire, that PSU and Modi stocks, the re-rating and the exuberance that we saw. Now, I think that seems to be that story is over. So we should not try to stretch it beyond a point. Valuation is a relative game. At one point, so many companies in the PSU and PSU banks were value picks, but they did not do well for empty number of years. So I want to stay away from these names. Maybe selectively you can have some companies, either defense or the commodity-based companies, depending upon what you like. But let's not try to stretch our portfolio in terms of exposure to PSUs.
Got that. By the way, there is a news flash coming in, which will tell you that the Prime Minister Modi's swearing-in ceremony may take place on the 9th, not on the 8th. 8th is a Saturday, 9th is a Sunday. So it will happen on the 9th at 6 p.m. in the evening, and we'll put this up for you in just a bit. And, this is, of course, sources to ANI. The Newswire is reporting that the swearing-in for Prime Minister Modi is on the 9th, Sunday, 6 p.m. That's essentially what's come through. Nigel, you want to add something?
It's going to be an action-packed Sunday evening then, Prashant, because PM Modi takes oath yet again. And later that evening, we have India taking on the might of Pakistan at 8 p.m. So it's going to be a late evening. It's going to be in the United States. So that match will end at midnight, I think. So it's going to be a
I think it should be the finals, French Open finals as well.
Yes.
I think. Because
Sunday will be
Sunday,
the French.
right? Sunday should be the men's final. So a lot happening and a lot to choose from as well. Okay, I think we'll take a quick commercial break here. We'll come back and we'll have our Alpha manager with us. Rajesh Kothari is Managing Director at Alpha Accurate Advisors. He'll be joining in on the other side. Stay tuned. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming.
Welcome back. We got okay, the flash is finally on your screen, which I was referring to before I took that break, which is the swearing in for Prime Minister Modi on Sunday at 6 in the evening. That's the news which is coming in. This is still sources, but this is what we are getting at this time. Well, PSUs are back again, back in action, and how? So let's just sort of track this journey from pre-election levels the lows that we saw on Tuesday, the election day, the election verdict day, and then, of course, what's happened since. Hormuz is standing by, he's put these together, and not just the price action, but a lot of the views on how they've changed over these last few days. Hormuz, over to you.
No, there was a time when PSUs were all over the street. Everyone spoke of nothing but PSUs. Now, the street darlings, as they were, saw retail investors pile in to ride this momentum at whichever price possible, float or no float. The result is there to see. Now, take a look at this graphic that comes up on your screen. These are the top 5 gainers on the Nifty PSE index starting 2023 till the 3rd of June, which is a day before the Lok Sabha elections were declared. REC and PFC up almost 5x, HAL up almost 4x, BHEL and Oil India as well among the outperformers. There are other non-index names as well which have risen anywhere between 300 to 400%. But one election result has changed everything. The BJP fell short of getting a majority in the recently concluded Lok Sabha election, but the NDA did. Yet, PSUs have been the worst hit. Now, in the blink of an eyelid, the street suddenly began to question this entire up move. Here are some of these views. Now, MK has said that they are exiting all PSUs and companies with a weak earning structure. UBS said that these rich valuation assumptions might come under question, and as a result, they are underweight on India as a market. Now, CLSA has not said anything about the entire PSU space, but they downgraded BEL, a PSU, saying that their valuations are expensive. BEL has been an outperformer too. Now, JM Financial has a buy recommendation on SBI, but it says that the valuation derating, a case for that may emerge only due to macro risks and a relapse of credit worries. Now, Jefferies was one of the big overweights on PSU stocks, and it has cut that overweight position on these PSU names. And HDFC Securities also said that it expects some PSUs to see a contraction in their multiples. And the result was there to see in this case as well. Now, REC and PFC, the high flyers of 2023, fell over 20% on the 4th of June. BHEL, SAIL, Bharat Electronics all declined 20% that day. The list doesn't end there. Concor, a disinvestment candidate, GAIL, ONGC, NTPC going through a demerger, a new listing upcoming as well, all fell between 15 to 20% that day. But there is some bit of recovery starting that day itself, and it continues through yesterday and today. Now, REC and PFC are both up 20% from their respective lows, as are BHEL and SAIL. But despite this slight recovery, most of these stocks are still well away from their recent highs. Now, REC and PFC, which reached levels of almost 600 before the election results were announced, are yet to cross 500 after Tuesday's drop. Same is the case with BEL, BHEL and most of the other PSUs as well. Now, lastly, the extent of this run-up was such that despite such a drastic fall on Tuesday, most of these stocks are trading well above their 5-year average multiple. REC above, PSC also on the price to book front, BHEL, SAIL as well, BEL at 50 times multiple now, or the 5-year average is 31 times. So PSUs were in the news then, they are in the news now. The reasons may have changed, the narratives may have changed, but just like the voter, the investor has the final say.
Okay, all right. Thank you very much, Hormuz. Indeed, it's been a breathtaking move on these stocks, gravity defying. Sometimes, it's hard to decipher. But then it is what it is, and that theme is still on. Very interesting. Prashant was just looking at the flashes as well. I think in a bit we'll have Parikshit join in to talk about the swearing in and the issues at play. I guess they say, right, there's in life, there's a first time for everything. And I think for Prime Minister Modi, this is going to be a first. Coalition politics. I don't think he's done that in Gujarat. I don't think he's not done that at the center. But now, as some of these inputs that Parikshit is getting are indicating that someone wants the infrastructure ministry, someone wants the railway ministry, and these ministries are extremely critical to the way market men are viewing the whole setup.
On a lighter note, Surabhi, I was talking to somebody, and somebody in the market only said this entire concern that, he's never headed it all the time from the time when he was chief minister in Gujarat, right? That he's never headed a coalition, has always been majority, right?
Yeah.
So the gentleman said, well, that's because the voters never gave him a chance to run a coalition government. So look at it like that.
So they now have put him up to the challenge.
To say that, that he's never run, it's, that almost sounds like a shortcoming. But the fact is, it's never, the mandate has always been one of majority. So
there's a first for everything, is this?
But you know, there was another journalist who said that yes, he's never had to negotiate with an ally, but even internally within the politics, there is a lot of back and forth and negotiation when it comes to you know, deciding who gets what in an allocation. So it's not that it's a job he will not be able to do. So don't write him off and saying that it's going to be difficult. He will manage. It's not done. He has to do it internally very often in the party also.
And let's not forget, I mean, he's got 40 years of political experience, grassroots level political experience behind him. So, you know, I think we'll have to watch this.
Well, Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. He's with us. Rajesh, good afternoon. Good to have you with us here. Thanks very much for your time. You know, I should say congratulations. We were chatting briefly and you mentioned that one of your core holdings is up 6x today. So I'm not going to ask you which one is it, but congratulations. And, you know, you've done well. And you've done well while avoiding some of this, you know, high beta, very high momentum, which is all the rage. You know, it includes metals, PSUs, oil and gas, energy, etc., etc. So yeah, I mean, well done. Rajesh, but what from here? We're speaking for the first time after these results, etc., came through. Markets are looking much better, of course, as compared to what they were doing on Tuesday. What's your sense? Does anything change?
So thanks, you know, Prashant. I think three important things from the election outcome. The one things what probably is not going to happen, probably will take backseat, is any land reforms or labor reforms or PSU divestment. I think we need to forget about it, at least for the time being. Second very important thing is unemployment, I think was a major issue, and therefore the thrust on manufacturing will continue. So that thesis one should keep playing on. The manufacturing side will keep doing well. But importantly, the third thesis, which is the focus on spending, focus on consumption expenditure, I think that has probably a little bit taken a back seat, and that has to come back in the front row. So I think these are the three broad observations from the you know, political perspective. From the market perspective, from the beginning of the year, our theme is be bullish but be prudent. I think the risk management is going to be extremely important as market enters into more volatile zone. Please remember, the coalition government means more headlines frequently. Some headlines market may cheer up, and some headlines probably many stocks may go down 10, 20, 30%. So, and those headlines will keep changing every week. So you need to pass through, you need to navigate those kind of volatile times. Market will keep delivering you returns, but what you own as a sectoral level and what do you own as a stock level, and more importantly, what you basically do not own, that basically will decide. So I think the quality will take front seat and momentum will take back seat. Please remember, last 18, 24 months, it was a throw the dart and make the money. I think next 24 months are going to be different compared to what we have seen in last 18 to 24 months. And that basically means we need to extremely remain focused on good quality, good growth, good governance, and play reasonable valuations, don't overpay, and be agile. If you think that you already made reasonable money, then probably one can move and focus on something else. So I think that's basically going to be the broadly how we look at the market over next 6 to 12 months.
Okay, all right. Yeah, Rajesh, stay on. We have more questions for you, but let's also address, of course, the all-important updates that Parikshit is picking up with respect to the swearing in of the Prime Minister, and of course, you know, the tussle between, I shouldn't say tussle actually, the discussions, let's use a better word, discussions on very important ministries. Parikshit, what are you picking up?
Well, we're now hearing that the swearing-in ceremony is likely to take place on the 9th of June between 7 to 7:20 p.m. This is what we're picking up from our sources in the government. The NDA 3.0 cabinet will have a significant representation from allies because this time the BJP has not formed the government on its own. The situation is very different. So from offering MOS rank posts to key allies last time around, the BJP will be offering key cabinet berths in the union cabinet to allies like the JDU, the TDP, and also the Shinde Sena. So let me give our viewers a sense of what are some of the asks right now. there was some speculation about who the speaker post will go to. We learned from sources that the BJP is likely to retain the speaker's post. And we've seen during Om Birla's tenure how the speaker plays a very important role during the passage of key legislations in the House. So the BJP would like to have that control with itself. The JDU and TDP want the NDA to follow a common minimum program, an agenda after the government formation. They want contentious issues like Uniform Civil Code, Agniveer to be reviewed and maybe set aside and follow an agenda that is comfortable for all. The view is within the JDU that whatever is not comfortable for people in Bihar and also for a state like Andhra Pradesh, please don't bring it to the table. Please keep all contentious issues aside and work only on those issues which are agreeable to all allies. So this is where the BJP might find some difficulty. There will be no rethink on things like Article 370 because those are already done and dusted. They have been supported by the allies. Also, when it comes to one nation, one election, the JDU supports it. When it comes to cabinet berths, the JDU has sought at least 4 cabinet berths, and this includes agriculture ministries, rural ministries, Panchayati Raj, infrastructure, economy, road transport. So a lot of asks there, and we're told that they may even settle with 3 key economic ministries. The TDP similarly has asked for important rural, agriculture, economic and industry ministries. Let's see what what happens in the next few hours and tomorrow. The LJP, which has won 5 seats, has sought 1 cabinet berth and 1 MOS rank post, but they can settle with 1 cabinet post as well. NDA MPs will be meeting in Parliament tomorrow at around 11:30. After that, all the NDA leaders will go to the President's house to give a letter of support to show that they are supporting the BJP-led NDA alliance and they should be welcomed to be forming the government. And the swearing in will then take place on the 9th in the evening. We're also getting to know from some of our sources in the NDA camp that the BJP is confident of getting support of independent MPs. Those talks are happening all across the country. We remember that there are 18 such candidates who are not affiliated with any political party, any mainstream political party. And some of them may be either inducted into the BJP or their support may be taken. And we may see those numbers. In fact, there is confidence that the NDA's overall tally may go up beyond 300 as well.
Okay, thank you very much for those important updates. Still in conversation with Rajesh Kothari, Managing Director at Alf Accurate Advisors. Rajesh, how crucial will be the the positions which will be given, the cabinet positions that the street is watching out for? And suppose if the key ministries of railway, infrastructure, digital India, they go to the allies, will there be a rethink? How would you approach this?
Well, I think, it is too premature to right now think about it because the names are not yet announced. But I think at a broader level, the government basically will decide the action point for each ministry. And irrespective of whosoever is sitting on the driver's seat, it is just not driver is going to drive, right? I think the entire thing have to go together. So, there are few important, that's why I say the manufacturing thrust will continue. So think from the market perspective, and I'm forgetting everything else. Let's focus on market. So manufacturing thrust will continue, number one. The power is something very, very important. Electricity is basic need. So you cannot tamper with power. You cannot tamper with transportation. So, making of roads or making of railways or making sure that power is available to every citizen 24/7. I think this is non-negotiable. But within that, very importantly, I think what we are doing, at least from our portfolio perspective, we are avoiding the power finance companies, correct? Because remember the days when there was an issue with the SEBs, they became a loss-making company. And there are a lot of things NPA happens. So power will be there, but whether it will be profitable or not to the lender or to the generator, that something is going to be a little bit, we need to think through it. So for time being, probably our thought process is avoid names where there can be risk. And at the same time, there are a few things which probably will continue to accelerate. So for example, as I said, the manufacturing theme, that will continue. So on that side, we are more focusing on consumption. We are more focusing on manufacturing, and of course, then there are others, which has nothing to do with the election. Say, for example, automobiles or auto ancillaries, or pharmaceuticals, which are the very reasonably attractive valuation. There are a lot of other things, on the market apart from just playing the election and the government-related policies. There are many things else as well.
Okay. Rajesh, so, just to sort of sum things up, now as we are moving towards the budget and we have more clarity on who's heading what ministry, what will be the overall construct of your portfolio and changes, if any, specifically towards the capex and manufacturing theme? So if you could just break it up, I mean, overall, how much would be defensive, IT, consumption? How much would you still keep on the more aggressive side, more richly valued stocks and manufacturing and capex?
Good question, should be. So automobile and auto ancillary is about 9 to 11% of the portfolio across by both AAA IOP as well as AAA budding beast strategies, and they are doing extremely well. More electrification of the vehicle is continuing. It means more sensors, more cameras, more airbags, and many more such things. So that remains a good part of our portfolio. Our second big holdings, of course, is consumer, where we own anywhere between 15 to 18%. And I think with this government new thrust on the rural economy revival, apart from that, of course, the normal monsoon, which is predicted by IMD, that argues very well for the overall consumption as a theme. Here we own both consumer discretionary as well as consumer FMCG. And I think they both are going to do very well, because of the revival. The third important piece, of course, is the banking and finance, which is about 26-27% of the portfolio. But here, basically, we are holding more private sector, whether it is a private sector banks as well as NBFCs. We also hold very selective 1 or 2 PSU names. So this is 28% of our IOP portfolio is the banking. Fourth is the pharmaceutical, which is, again, we are very positive on this theme from last 3 to 4 months. And then the fifth comes, the CapEx related themes. But in CapEx, we are just not playing the India. We have selected the businesses which have very strong India business as well as very strong export business. And they are seeing tailwinds on both the sides. So more product portfolio kind of a companies, which is again less dependence on government. Of course, there is a dependence, but the dependence is a little bit lesser rather than playing, pure PSUs. So that's basically the, CapEx side. And then, of course, we hold about 9 to 10%, software. So it's a fairly diversified portfolio without much dependence on one single sector in a big way. And of course, within that high growth and best of the balance sheet. That's how we are constructing the portfolio.
Right. Rajesh, do you want to, since there's so much has happened, so much dislocation within stocks, etc. has happened, I just will read out this flash. ITC shareholders have approved the demerger of the hotels business. So that's essentially the news which is coming through. And I think that's very well advertised. But now this needed shareholder approval and it's kind of come through at this stage. Rajesh, in terms of specific, 1 or 2 ideas, if you want to discuss, I mean, just to tell our viewers how you're thinking about these things now. I mean, would you want to do that? Because, I mean, stocks have moved quite a bit, quite violently over the last few days.
I think that violent move, what you are ascribing is more towards the PSU basket rather than to other baskets. And I think very important is you look at 31st March stock prices and you compare today, rather than Thursday, Friday and every day, because otherwise you need to be nowhere. And still you will see there are many stocks which are done extremely well. And there are enough opportunities which are still available at a reasonable growth and reasonable valuation, like auto ancillary I'm talking about, like one of the company which is a core holding, which we were discussing, like Uno Minda. Please put a disclaimer. We are holding this company, correct? Now, forget the case in point of specific company. But if any global company who would coming to India would like to have a great market share, there are hardly 4 or 5 ancillary groups to whom it can approach. So when you're basically having a portfolio of companies, be it a Uno Minda or be it a Gabriel or Anand group, these are the groups who can basically, cater to your requirement if you're coming from Japan or if you're coming from US or if you're coming from Europe. These are the guys who have the capabilities, technological bandwidth, they have a right balance sheet, debt-free balance sheet, and they have great plants and great labor and so on and so forth. So I'm saying one needs to think through like that. And those are the things where you basically can make, huge multiplier returns. Unfortunately, we cannot talk stock specific more because of the regulations. But that's basically the overall thought process, while selecting the companies.
Okay, since you did mention, and of course you put the disclaimer yourself for Uno Minda, where are valuations at, Rajesh, for something like this?
Well, valuations are expensive, from a traditional perspective, but moment you put PEG in your framework, then valuation probably will look a little bit reasonable. Please understand, the EPS, what Street is assuming, where generally Street goes wrong is that because once you have a new joint venture which comes in, all of a sudden your next 2 years, 3 years, the visibility after 18, 24 months is completely different. Your size of opportunity, for example, the new joint venture, what the company had signed, the content per vehicle is completely different compared to where are you today. Am I right? So it is a 3x to 4x increase in size of opportunity. Your TAM, the total addressable market size, therefore, goes up meaningfully. It is not a small steps. And likewise, if you keep adding, like Gabriel, for example, we are holding this stock. Please put a disclaimer. Now, moment they added Sunroof, they are number 1 in shock absorber, top 3 player in shock absorber industry. And then they added Sunroof as a second category. Again, they are going to become top 3 in Sunroof. Now, if they get like this 1 or 2 more over next 4, 5, 7 years, which is possible, think of it, what will be your EPS, correct? So sometimes you need to go really deep dive and think a little bit, out of box, think a little bit strategic, a little bit long term, and that can probably help you to, make a little bit extra alpha compared to the normal market returns.
Okay, no, absolutely. Take that point. We had Uno Minda, of course, with us. I'm not sure if you saw the interview in the morning with us, and they did talk about the sort of opportunity that they see. They didn't, of course, quantify numbers per se, but they did give us some numbers, and we'll have the sort of details up for you a little later. Thanks very much, Rajesh, for joining us. It's a pleasure, as always. Let's focus on some specific sort of brokerage notes which have come through post-election outcome. CLSA has come out with a note on sort of capex plays. Jefferies is talking about housing, affordable housing, as a bit of a theme from here out. Sudarshan has got details on both these. Sudarshan.
So brokerage notes have started flowing in for the sectors that new government may focus on or sectors that can be amongst priorities in upcoming budget. So first one is CLSA on capex. CLSA says its channel check suggests that government in its 100-day plan agenda may talk about large orders that can be identified to be placed across defense and infra domains. And this large order placement, as per CLSA, would reassure investors, and likely demand for more capex for the 2 states, that is Andhra Pradesh and Bihar, should revive state capex as well. And CLSA believes L&T, IRB, HAL, NCC and J. Kumar will be key beneficiaries of increase in capex at both state and at central level. Next one is Jefferies on housing finance companies. It expects government to announce revamped affordable housing segment scheme in budget, and it says revamped scheme could improve housing loan demand, especially in affordable and mid-ticket segment. Earlier affordable housing scheme constituted 48%, 23% of Home First's and Awas disbursement over FY18 to FY22, and large housing finance companies like LIC Housing and Canfin also see some tailwinds from the scheme if the loan cap is raised in the new schemes. So preferred picks for Jefferies are Home First and Awas in affordable segment, and Canfin and LIC Housing in the mid-ticket segment.
Thank you very much for that. By the way, the Nifty Bank, which had dipped into the red when we started the show at 2:30, is now up close to about 250 points. Today is also the weekly expiry on the Nifty. So maybe that's the 3 p.m. move that's playing out. But now the Nifty Bank is up close to about 200 odd points, 0.4% higher. But outside of that, ITC is also inched up on the back of the news about the shareholders giving their go-ahead, the green light for the demerger of the hotels business. ONGC, Bharti Airtel are 2 other stocks where the gains have now exceeded 2%. We will slip into a very short break on that note. On the other side, a few BTST calls from our technical experts.
On YouTube.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Well, a few stocks actually are bucking the trend. Biocon is up 10% as we speak. Nippon Life is up 13%. So big moves out there. And United Spirits, well, it's been one of the big winners for the week itself. It was trading in the red at the start of the show. United Spirits seems to be saying cheers. That stock has moved to the high point of the day. Midesh Thakur is back with us. Midesh, what's your buy or sell call that you have for us?
Nigel, I have in fact all buy calls. Given the fact that, a space like technology and FMCG continues to do well and is on radar. So I have a BTST on McDowell's or United Spirits, which I would recommend buying or taking a BTST position with a stop just below levels of 1300 for target of 1340. Persistent is the other one, which is a BTST with a stop at 3660 for targets of 3745.
Thank you very much for that. Now let's get to the big event which is upon us tomorrow. The RBI's Monetary Policy Committee, MPC. The meeting is actually currently underway. The policy decision is due tomorrow. Now the CNBC-TV18 poll is expecting a status quo policy with the RBI maintaining its stance of withdrawal of accommodation and no change on the rates front. Ritu joins in with the details of the poll. Ritu.
Well, this may be a bit of a wait-and-watch policy because it's squeezed in between the recently concluded Lok Sabha elections and the full budget that is only going to be presented in July. But more importantly, you have a strong growth print, inflation is still ruling above target, and the US Fed is not really itching to cut rates. So there's no real reason for RBI to move on rates just yet. And so this time around, what the markets are going to do is focus on other things like what the central bank says about, one, liquidity, because, systemic liquidity continues to remain in deficit, even though you have that government surplus cash balance as the elephant in the room. And the second one on inflation, because the last mile of disinflation is taking a tad longer than what was initially expected. But that said, no one is expecting, of course, any change in the repo rate. So a status quo policy for the 8th consecutive time and no change in the stance, which is also likely to be left at withdrawal of inflation, withdrawal of accommodation. Now, none of the economists that we polled expect any change in stance before August, in fact, and the majority are expecting the first rate cut to only happen in October or some even later. On the macro front, the inflation is expected to be left unchanged, the forecast that is, for the year at 4.5%. Now, keep in mind, inflation has been moderating at about 4.8% in April, and core inflation providing some comfort to the MPC, but the high food prices, they continue to remain a spot of bother. On the growth numbers, however, they're likely to be revised up from 7%. A majority of the respondents said it could be anywhere between 7 to 7.5%, but many are even expecting it to be left unchanged. The tone of the policy is expected to be absolutely even because there's no real change from the last time around. And finally, to end with what we started with on liquidity. Now, markets want to watch out for any measures RBI may introduce later to regulate the changes in liquidity from any passive inflows that come in from index inclusions. And of course, they expect RBI to continue managing liquidity through the main and fine-tuning operations as needed.
All right, Ritu, thanks very much for that. So that's a big one tomorrow, the RBI policy. We'll take a quick commercial break here. We are back with more on the other side. Stay tuned.
हमारे जो नेता है नरेंद्र मोदी जी के नाम पर ये चुनाव लड़ा है और उनकी जो क्रेडिबिलिटी है, उनकी जो गारंटी है, उन पर जो लोगों का विश्वास है, आज उसी का ही परिणाम है कि हम तीसरी बार जो है भारतीय जनता पार्टी जो है अपनी सरकार सेंटर में बनाने जा रही है और आप सबका आशीर्वाद हमें चाहिए। और ये साथ ही मैं अब जो है आपसे मिलती रहूंगी और आगे जो भी है, जो जिस तरह से हमारा प्लान है चीज़ें एग्जीक्यूट करने का और लॉन्च करने का, वो हम डिस्कस करते रहेंगे। आप सब मीडिया बंधुओं का भी हमें जो है वो इसमें सहयोग चाहिए होगा। और मंडी का जो है अब भविष्य जो है बहुत ही उज्जवल होगा। धन्यवाद।
Welcome back. Well, a few stocks are doing quite well, but we have Gurmeet Chadda who joins us on the show of Complete Circle. Hi, Gurmeet. Good afternoon and good to see you. Well, some of these NBFCs are doing well in today's trading session. Anything you like from that space?
So we like the housing finance space. I think the Bajaj housing could be a bit of a trigger for some of the other housing finance space, and I think there's an upcoming budget. Government will focus on affordable housing, especially in rural and semi-urban in states where the performance has been slightly subdued. So Bajaj Housing, for example, could re-rate some of the other ones also. So there's something like PNB Housing has a 63,000 crore loan book and trades very reasonably at 1.3 times. And capital adequacy is almost 30% versus, let's say, Bajaj Finance at 22%. They have shrunk their corporate book to less than 2-3%. 98% is now retail. And they've opened almost 100 branches, so nicely positioned there. We also like Aditya Birla Finance, the holding company, because of, one is the change of leadership with Vishaka coming in, and a lot of changes happening, in both the NBFC where the AUM is around 1 lakh crore, as well as the asset management arm and other businesses. So these are the two spaces we like, and I think some of the better run ones, once the cost of funds drops, which is more probably medium term, like the Poonawalla, the Bajaj Finance of the world, will probably start gaining some traction. They've been a little subdued in this round.
Gurmeet, afternoon. What about Uno Minda? They've entered into a technical partnership with a Chinese-based company, which expands their presence, addressable market in the EV four-wheeler space. They're anyway pretty strong in two-wheelers, but now they're tapping into four-wheelers. Is this a very big positive for the company? And with the up move that we've seen today, 15% up, I think, is the stock pricing in the news?
Yeah, it's incrementally positive. See, other than the EV portfolio now, with this tie-up, they get very aggressive with powertrains, EXL, the inverter chargers, etc., which is the EV part of the portfolio. So there are three portfolios, Rima. There's one is a convenience portfolio, which is your switches, the power window switches, the horns, the lightings, right, which they are very, very dominant. Then is your safety portfolio in the car, which is your sensors, airbags, etc., where again they have a 15-20% market share. Sensors, they have actually more. And then there is a premiumization portfolio, which is more content, more features, which is your alloy wheels, infotainment systems, the touch screens, etc. of the world. So they cater to everything. And that's why if you see the kit value now, which in 2016 was 2,000 rupees a car, is now upwards of 30,000 and likely to go up. It's been more than a 10-bagger for us personally. I've invested in this company for very long now. So happy to see the movement. I think it was a little subdued versus other auto anch, probably in the first half or the first 2 months of the year, and now probably seems to be catching up. So very solid company. In fact, I personally think it has the potential to hit 1 lakh crore market club in next 2 or 3 years.
Okay, all right. Gurmeet, what about waste and water management? There were a couple of themes that you were playing out there as well. Tell us more about that.
Yeah, so I think it's a genuine environment need now. I think if you look at, for example, water desalination with the kind of coastal line we have, there's a huge opportunity. There are government initiatives. Then if you see, for example, the sewage we produce, we only treat 28%. We probably end up producing 80,000 MLDs of sewage. The treatment is hardly of 30,000 MLDs. So I think there's a big requirement there. Also, the manufacturing water is non-usable once it's used for manufacturing. You can't use it for watering, etc. So the whole gamut of, treatment of water, reuse, salination, I think is something which really attracts us. So we're monitoring VATech Vapak there. Then there is a government ruling on, use of recycled plastics. You need to now use 30% recycled content in PET bottles, in the big drums, etc. And then there is a fine of almost 5 rupees a kg starting next year. And it goes up incrementally, which is a huge dampener for companies which are in beverages and paints, etc. So we like their Ganesha ecosphere. And I think this could be a very secular theme going forward. And the companies are pretty small in this space. So there is an opportunity to enhance margin as well as increase top line, which which is a perfect cocktail to, re-rate the stock as well.
As we're coming down to the final leg, this resurgence has been very, very smart indeed. The day's high was just around the 22,900 mark, 910, 22,910 to be precise. And the market's not too far away from that. So it's a good move. And it's telling you that the mood is by the dip. That's what's really playing out. Gurmeet, finally, just before we hit, actually, I think we'll have to start wrapping up because we are down to the last 1 minute. So just stay on. Let's look at the final rates then as they're coming through. 232 points higher on the Nifty. It's turned out to be a good day. This is a market that's now once again just 2% off the all-time highs. And the sector rotation has been the interesting facet of today's trading action because it's not the follow-on buying on FMCG, but a complete reversal back to the mood around PSUs. The CPSE index, for instance, that's been the tall star today. The CPSE index gaining about 3.3%, for the day. And the PSE index, the Nifty PSE index, up almost 4%. So that tells you, who the stars were. And then there was a late tech rally that was very smart indeed. So the top winners on the Nifty, Tech Mahindra, HCL Tech, Shriram Finance, SBI Life and SBI, both the names from the SBI stable doing very well. There was NTPC and Aisha Motors and Infosys. So a very diverse set of stocks which was taking the market higher. Of course, some cool off in the consumer names.
Well, the Midcap index outperforms handsomely, 2.5%, very strong advance decline ratio, 13 stocks advancing for 2 in the red. So the Midcap market was very vibrant. But a quick word on the large caps under pressure. Most of the consumption names, as Surabhi was pointing out, HUL, Asian Paints weak, Nestle ending in the red, and Hindalco down 2.5% too.
It's a long list of big volume-led gainers, right? And you guys mentioned some, but the list is really long. Nazara, went up 15% by close. That's a very large volumes. So, and that's the other thing, right? Volumes for today as well. And NSE yesterday put out some data saying that they handled some of the largest volumes the day before. And I think this week generally has been, every day records with regards to the volumes traded. JBM Auto, of course, BATech Vabag is another one. BATech Vabag has finally now really broken out into a new high. So, big 14% rally there on that one. Large volumes there as well. AG's Logistics, I think we mentioned. Brigade, Exide, big day, NCC, PNC, KNR Construction. These are all sort of, construction companies, contractors largely. And of course, you had names like Cochin, Mazgaon, BHEL, the PSU space, which did very, very well today as well. So it's all in all, fantastic kind of a day. We were yesterday talking about how Friday to Friday, week so far, as of yesterday's close, we were flat. Well, we're not flat anymore. The Nifty is up 1.5%. When sort of, mapped from last Friday's close. That's about 320 points after everything's said and done. So it's turning out to be a good week as well. I think we had to wrap up things here. So it's goodbye from all of us and the Closing Bell team. Thank you very much for staying with us. But action continues. Markets forward coming up next. Stay tuned.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
I'm in a very totally ecstatic mode now, because what was so very impossible has become gloriously.
The Nifty and the Sensex gain over 1%. The Nifty reclaims 22,800. Midcaps outperform. The index surges 2%. BSE listed companies market capitalization gains 8 lakh crore rupees today.
Nvidia becomes the second most valuable company after Microsoft in the United States, ahead of Apple after its market cap tops $3 trillion. This even as US regulators are likely to start antitrust probes into the roles of Microsoft, OpenAI and Nvidia in the AI industry. The Nifty IT, meanwhile, soars over 2%.
Uno Minda rallies 14% after links a partnership with Suzhou Innovance Automotive to strengthen its electric four-wheeler play. HAL gains 6% after it inaugurates a new facility, and BHEL rallies on a 7,000 crore rupee order win. Hello and welcome to Markets Forward, your go-to show where we tell you all that went on in today's trading session. We'll also gear you up for tomorrow's trade. I'm Nigel D'Souza, and joining me as always is Surbhi Upadhyay. Hey Surbhi.
Hi Nigel. Well, interesting day. The Bulls are kind of wrestling control back from the Bears all over again, and a pretty green screen by the end of it.
Well, that's right. And in the next 20 minutes or so, we'll tell you all the big news, the key developments that took place on the Lal Street today. We'll also get you some top corporate voices that we spoke. But let's kickstart the show with all the day's action. Well, let's sum it up then, a quick few lines then in terms of today's action. The Nifty opened close to around 22,800, and by the close on averaging, we ended at around 22,820. One would say, if you were carrying a long position and if you booked in the first minute itself, you'd be quite happy, because we actually ended where we had opened up. 22,800 is the open, 22,820 is the close. But it's good that at least we saw a follow-through session after the massive pullback that we saw in trade yesterday. And it was a good day in trade. Nvidia overnight went ahead and hit $3 trillion of market capitalization. It was up close to around 6% overnight. So big move is what we saw out there. And it had a positive rub-off on the tech names. In fact, for this week itself, the tech names have been the big outperformers. That index is up close to around 5%. And in trade today, you had a lot of the stocks that were doing well. But I think your portfolio will feel very, very good today. Not because the Nifty was up at around 22,800, because the breadth of the market was absolutely splendid. 6 stocks were gaining for every 1 stock that was declining, and that's what makes your portfolio feel very, very good. That's the mid-cap index, but I think the crisscross lines or the advanced decline ratio will tell you the picture. And I think it was that sort of a day, right? Maybe the headline index will run into some resistance at higher levels, but this is a stock-specific market. You pick your stock, you grab on, and in fact, you'll be making some good money.
Absolutely. And the market can also be a place of extreme sentiment, Nigel. And we're seeing that play out in terms of the way the stocks are rotating and the sectors are rotating. And we saw that again today. I mean, at the index level, as we've been saying, it was a good day. In fact, the intraday high for the Nifty was above 22,900, 910 to be specific. We fell a bit, but there was a buy on dips constantly taking place. So finally, the last wave of buying that came and took the Nifty to the 22,800 mark. Now, sector rotation, that's what this market's become all about. Till yesterday, there was this rush to safety. Everybody wanted to buy defensives. FMCGs were the toast of town. Guess what? Today, that reversed. Today, the favor was back with the more aggressive economy-facing stocks, whether that's PSUs or some of the other CapEx names. And we'll talk about these stocks as we go along. In fact, it was the PSE index, the CPSE index, and the PSU bank index. I mean, these were the ones that were really leading from the front. And even a sector like real estate, good gains coming in over there. So once again, basically economy-facing PSU, aggressive CapEx, that theme was back on today. And what was getting sold off was actually FMCG and pharma. Both those indices were down a bit. And if you look at the Nifty, the stocks will actually mirror that kind of sectoral move as well. In terms of numbers, the Nifty now, after all of this drama, the choppiness and volatility, is just 2% away from the all-time highs once again. But the CPSE index is still off a good 11% from the peak. So that's been the extent of the price damage that we've seen. The focus going forward obviously is all about the swearing-in ceremony and then the allocation of cabinet berths, who's getting which ministry. That's really going to captivate the market's mind over the next couple of sessions. But let's get started because we have plenty of ground to cover. Lots lined up for you on the show as always. And here's the lineup. We'll start, of course, with all the key movers and shakers. Vivek will tell us in more detail about those sectoral trends that we've been talking about. Lots of stocks on our radar as well. BHEL rising on the back of order wins. Century Textiles in focus as it's looking at a joint venture in Gurgaon for real estate development. Uno Minda was sizzling away on a partnership. We'll tell you all about it as we go on. Last but not the least, of course, all the key events to watch out for tomorrow's session as well. But first, let's talk about this green screen. Vivek is here with all the moves and shakers. Vivek.
Well, thank you so much for that. Spoiled for choice today in terms of, which are the stocks to pick. So, we'll go sector-wise. One particular sector today that saw significant up move was the IT pack, and even within the IT pack, exaggerated moves were seen as far as the mid-cap IT names were concerned. So look at the entire pack today. Have a look at names like HCL, Zenza Tech, Sonata Software, 1 point, very, very high, cooling off a little bit towards the end of the day. The next set of stocks that did quite well, while the large cap pharma names saw a bit of profit booking today, the mid-cap pharma names and within that select names actually saw quite a bit of buying frenzy. Especially have a look at name like Biocon up 9% in the session, Granules too up almost over 6.5%. Glenmark Pharma too in the last hour joined the rally as far as the pharma pack was concerned. The other set of stocks that did quite well, one that we've been alluding to, is the infra and the capex led themes. So have a look at the infra names. L&T leading the rally up over 2%. Have a look at KNR Construction. Last 3-4 trading sessions the stock has gained significantly. NCC Limited, PNC, NBCC on the back of an order win. All of these stocks saw stellar rally and stellar gains. The other stock on the radar was Century Textile. In fact, today was quite a good day as far as the entire Birla Group was concerned. Century Textile, inking a pact out to go ahead and launch a real estate project in Gurugram with a revenue potential of close to 5,000 crore. The stock rallied almost 14.5%. The other stock on the radar, Uno Minda, again, inking a JV with an Innovant subsidiary. Now, what's actually happened is that brokerages believe that there could be more content per vehicle as far as Uno Minda is concerned. Brokerages have gone ahead and raised the target multiple along with the target price for Uno Minda. PSU set of stocks, whole host of stocks, won't name all of them, but some stocks that caught the eye in terms of the kind of rally that you saw. PSC REC up another 5.5%. The two shipbuilders, Masco as well as Garden Reach, both up over 10%, and Hindustan Copper too held on to its gains of over 5%. On the other hand, like you mentioned, the FMCG stocks cooling off a little bit after the Stellar 2 rally. Honasa amongst the top laggards. Avenue Supermarts, DMart 2 seeing a little bit of a cool off. The other stock that saw a bit of a cool off was Sun TV. 2 days of significant rally, but today the stock cooled off around 4%. And lastly, Hindalco yesterday, despite the kind of negative news flow that came on back of the IPO being called off for Novelis, the stock rallied yesterday. Today ended as the top Nifty laggard.
Okay, all right, Vivek, thanks for that neat list. Well, joining us on the show today, we have Shilpa Raut as well as Gurmeet Chadha, who joins us on the show. Hi, lady and gentlemen. Thanks a lot for joining in. Well, Shilpa, I wanted to ask you first, how do you approach this market? A few sessions ago, we were on the verge of breaking the 200 DMA, went down to around 21,300, and surprise, surprise, we may end tomorrow at around 23,000. On the charts, how are things looking? 22,800 is what we conquered today.
If we put up this way, today we actually saw some gains. If we compare the market that we saw last week on Friday, we can actually assume that Monday, Tuesday and Wednesday literally didn't happen, because on Thursday we were actually, Wednesday we were actually there where the Friday closing was happening. So today we can assume that it is a fresh day after that Friday we saw. So from here, if you see that 23,000 will act as a resistance, because it will be a psychological barrier as well. And from here, if we sustain above 23,000, then you talk about higher levels of 22,400 to 700 again. But tomorrow, I guess, you will see some sort of profit booking coming again and again at those levels. And support also is coming at around 22,500 zone. So this 500 points of, trading band for Nifty is something one can look forward.
Okay, all right, got that. Thanks very much. Stay on, we'll have some more questions for you. Let's also look at some stocks, and then we'll also get Gurmeet in and get his view on a lot of these movers and shakers. BHEL was rallying almost 10% higher. Well, for starters, there was a lot of positive sentiment around PSU stocks once again. And then they'd had specific news around it as well. The company has bagged an order worth 7,000 crore rupees from Adani Power to set up thermal power plants in UP and in Chhattisgarh. Let's head back to Vivek for more details on this. Vivek?
Well, that's right. A good day if you are a thermal power producer or a supplier. So BHEL, once again, when you're talking about BHEL, the order book is extremely strong right now the order book at the end of Q4 stood at over 1.3 lakh crore. That's very high. And today, another 7,000 crore has been added. So the company has received 2 sets of orders from 2 subsidiaries of Adani Power. The first one, like you mentioned, is in Uttar Pradesh. The company will be supplying equipment of boilers, turbines, generators, and associated ancillary equipment along with O&M. And the company expects this particular order to be worth over 3,500 crore. Similarly, the scope of work is quite similar when it comes to Chhattisgarh. Over here, once again, the supply is for a 2 into 800 megawatt, that is a 1600 megawatt power plant that will be set up by an Adani Power subsidiary, and the equipment supply of boiler, turbine, generator, and associate auxiliaries is what BHEL will be doing. Over here too, the order size is over 3,500 crores. So very strong order wins coming in. On the back of that, the stock surged in this trading session today.
Okay, all right, Vivek, thanks for that. Well, Century Textiles as well, that was the other stock that was flying away. This after it announced that its realty arm Birla Estates has entered a joint venture to develop a project in Gurugram. Sonal joins us to fill us in with those details. Sonal, tell us more.
Well, the revenue potential is something that the street seem to like, and also expansion in the NCR region. To give you the news first up, Birla Estates, 100% subsidiary of Century Textiles, has inked a joint venture with Barmalt India Private Limited. This is to develop 13.27 acre of land parcel. This is for a luxury park in Gurugram, and the development potential of this particular project will be 2.4 million square feet with a revenue potential of up to 5,000 crore rupees. So that's a big number that the company is talking about. Additionally, they talk about expanding their reach in the NCR region, which has been growing much faster than the other markets as well. Remember, the stock is up already 67% this year, and this addition is something that is liked by the stock market as well.
Okay, all right. Thanks a lot for that, Sonal. Well, Gurmeet, you come in. You tell us any view on either of these two names, BHEL or Century Textiles, or something that you like from both these two spaces.
So, Nigel, we like the power space. We, in fact, play the complete value chain in power space. BHEL, unfortunately, there's a bit of lack of consistency in the way they report numbers. Last quarter was a bit of a surprise. But, in general, I think we're very constructive on this sector. I don't think so much will change as far as, the new government comes in. What we like more right now is NTPC and Power Grid. NTPC almost has now more than 70,000 megawatt of installed capacity. They have a clear vision to get to 130, 140 gigawatts, and of which they want 40-45% from a renewable base. They also have plans to hive off their renewable energy business, which in my view should lead to very decent annual locking, still at about 18 times, 5-6% kind of dividend yield. I think this something gives you margin of safety and growth both, versus a lot of names which have run up too much in PSU space, whether it is defense or so that's something we like. And we like Power Grid, again available 18 times, 17-18 times, and there is a opportunity of almost 2.5 lakh crores worth of transmission lines which will come over the next 4 or 5 years. They have like 65% market share, and the government stake is already 51%, so not much supply pressure as far as equity stake getting diluted is concerned. So these two names we like more from a PSU basket as far as the power value chain is concerned, and there are other ancillaries which we have in the book.
Okay, all right. Since you were mentioning PSU, Gurmeet, let's focus on some of those names. It's been nothing short of a wild ride for this PSU stocks. We had a bit of a rally. The stocks came under pressure on counting day. Hormuz joins us to shape all of that up for us. Hormuz, take it away.
There was a time when PSUs were all over the street and everyone spoke of nothing but PSU stocks. Now, the street darlings as they were, saw retail investors pile into this momentum at whichever price possible. The result is there to see. Now, take a look at this graphic that comes up on your screen. Now, these will be the top 5 gainers on the Nifty PSE index starting 2023 until the 3rd of June, which is a day before the Lok Sabha election results were declared. REC and PFC are up 5x, HAL up 4x, BHEL Oil India also among the performers. Now, there are other non-index names as well which have risen anywhere between 300 to 400%. But one election result has changed everything. Now, the BJP fell short of getting a majority in these recently concluded elections, but the NDA did. Yet, PSUs were the worst hit. Now, in the blink of an eyelid, the street suddenly began to question this up move. Now, these are some of the views here. MK said that they are exiting all PSUs and companies with weak earning structure. UBS said that these rich valuation assumptions might come under question because they are underweight on the Indian market overall. CLSA has not written about the PSU space as a whole, but they downgraded BEL. They said valuations are expensive there. JM Financial has a buy recommendation on SBI, but they said that there is a case of a valuation derating that may emerge, but that is only when macro risks emerge and a relapse of credit worries. Jefferies was also one of the big overweights on PSUs. It has cut that overweight position as well. Now, HDFC Securities also said that it is expecting some PSUs to see a contraction in their multiples. Now, the result is there to see in this instance as well. REC and PFC, both of them fell over 20% on the 4th of June. HAL, BEL, All India all declined 20% that day. The list does not end there. Now, Concor is a disinvestment candidate. GAIL, ONGC, NTPC, all of them fell anywhere between 50 to 20% that day. But there is some bit of recovery starting that day itself, and it continued through yesterday and today. Now, REC and PFC are up 20% from their respective lows, as are BHEL and SAIL. But despite this slight recovery, most of these stocks are still well away from their recent highs. REC, PFC hit almost levels of 600, but they are yet to cross 500 after Tuesday's drop. Same is the case with BEL, BHEL and most of the other PSUs as well. Lastly, the extent of this run-up was such that despite such a drastic fall on Tuesday, most of these stocks are straight well above their 5-year average. Now, take a look at this. REC and PFC are well above their average, as is BHEL. SAIL, BEL at 50 times is also above its 5-year average of 31 times. So, PSUs were in the news then, in the news now. Reasons may have changed, the narrative may have changed, but eventually the investor, just like the voter, has the final say.
Absolutely, that is true. Horbaz, thanks very much. Yes, it's been a fast-moving set, these PSU stocks for sure. Thank you for that analysis. Gurmeet, before we let you go today, we were just talking about Century Textiles doing this real estate expansion in Gurgaon and see what's happened to the stock today. You tell us, and real estate anyway came back with a bang. I mean, the market was looking at the risk-on mood once more. Now, if you want to play real estate, will you still look at some of these developers like Gurgaon? I don't know if you had a look at Century Textile. If yes, give us a view there as well. But basically, real estate and what you're seeing around you in NCR.
No, I think I'm constructive. Reason being, we will have a reversal of rate cycle, and we look long term. We don't look at what's happening on an immediate basis. Also, the model is changing. Everybody is only focused on development. I think DLF is probably leave where you need to have a rental portfolio which gives you regular cash flows. We met some time back the Suntech reality promoter. He was talking of how he wants to move now going forward, right mix of commercial, residential, focusing more on premium segment more versus a more affluent segment earlier. So a lot of developers are now changing the business model. RERA has done its way. So we are positive selectively in that space. Also, what has happened is, we had existing inventory being sold during COVID. And then we saw a lot of new launches now in last 1 year. So a lot of civil work is right now going on. So the home improvement demand will come, with a bit of a lag as, the civil structures takes place. So people who haven't done well, like the Kajaria, the Serra sanitary where last 1 year has been a little soft, that could become a part of the portfolio as well. So I'm pretty constructive. We've been very constructive even on Polycab, and all of that happened, including, the tax non-compliance. So I think this is a very secular theme. You have to probably keep rotating between developers and home improvement depending on which cycle you are.
Got it. That's a good point. Yeah, some of these home ancillary stocks, they've not run up as much as perhaps the builders themselves. So that would be a good idea as well. All right, Gurmeet, thank you very much. And thank you, Shilpa, as well for joining in and giving us some perspective on trade. We do have to slip into a quick break today, but come back on the other side and we'll tell you about some of the top corporate voices and the commentary that we picked up today.
And it's definitely blessings from my grandparents who worked up to having the Janasangh during 30s. They were working then. And the kind of pains and travels that they had to go through, all that is getting paid now. It's a tribute to them as well.
Welcome back. As promised, let's move to a lot of the interesting corporate commentary that we picked up during the course of the day. Now, Uno Minda was up almost 15% to at times 18% during today's session. This after the company said that it had partnered with Suzuki Invoance Automotive to strengthen its electric four-wheeler portfolio. We caught up with the company's group CFO, Sunil Bohra, who said that they would see a 20% EV passenger absorption as the company moves forward. Take a look.
20% will definitely be a number, maybe 30 or 32, because what we see as of now, there are projections of 17% by 30, 20% by 30. Everybody has different assumptions, and that's why I said normally we don't comment on the penetration or the volumes. But yes, as we move forward, I'm sure market will see at some time 20% penetration as well. In terms of margins, I would say a little early to comment on, because as of now volumes are very less. But as we move forward, as we build scale, as we achieve those kind of revenues, we do expect the margins to be broadly in line with our average margins. But yes, they are as of now a little lower.
Well, CG Power will follow into the consumer business by selling appliances. That's the word that's coming in from Murugappa Group's Vilayan Subaya. Speaking to Shireen Ban from the sidelines of the EY World Entrepreneur Awards in Monte Carlo, where he is representing India, he said that he was betting big on electric mobility and semiconductor business. However, he ruled out any acquisitions in the near future and bets on organic growth and partnerships. Let's hear him out.
A new business that we're adding in that mix is the consumer business, because a non-compete got over in 2021. So that continues to have a lot of opportunity. For the consumer business, we basically start with fans and pumps and kind of, the more general electrical appliance areas, and then look at new areas for growth beyond that. So for the first couple of years, we'll just be establishing a beachhead in those areas, and then we'll start looking at what we can do from a growth perspective. Government has been very, very fast with all of its approvals. We've just started the design and building of the factory in Gujarat, but these are quite complex factories to build. So our estimates are it'll be 2026 before we can basically start operations at that factory. But we're kind of going full steam ahead. We've got I would say over 50% of the senior level memberships of the team basically recruited, and we're basically working on the design and build at this stage.
Okay, so those were some of the major corporate voices that we had on the channel today. Before we wrap, as usual, it's time to tell you about the key events to watch out for tomorrow. Manglam is here with the list. Manglam.
Well, so the most important event to watch out for tomorrow, of course, will be the RBI policy. But from a market standpoint, it may perhaps be a non-event because, the street is not expecting much. It's a status quo, which is expected on both rates and stance. Maybe a more calibrated view from the RBI post the first budget of the newly elected government will be extremely important. And that brings me to the second cue, and that is something that the market will be watching out for. All the political events. The NDA Parliamentary Party meets tomorrow at 11 a.m. All NDA CMs and deputy CMs will attend. Whether there is any clarification, commentary on whether this, swearing in happens on the 9th of June, etc., would be extremely crucial to watch out for from a market standpoint. Then the IT space, TCS will be in focus. Of course, they're holding a press meet on artificial intelligence. The FMCG pack has also been in focus. So commentary from Marico at the investor meet at JP Morgan conference will be extremely crucial, especially when it comes to the demand standpoint. And finally, we'll wrap up the day with some data coming in from the US post markets, that is non-farm payrolls and the unemployment rate. So those are a bunch of events to watch out for tomorrow.
All right, Manglam, thanks a lot for that. Well, on that note, though, we'll wrap up on this edition of Markets Forward. But you stay tuned. More news and updates coming in on the other side.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Hello and welcome to Business 360. I'm Shireen Bhan. We're coming to you live from the CNBC-TV18 HDFC Sky election headquarters. Here are the headlines that we're tracking after the big election verdict. Stock markets continue to recover after the counting day plunge. The Sensex and the Nifty gain 1%. Midcap index gains 2%. The Reserve Bank is expected to maintain status quo on monetary policy tomorrow. 80% of economists polled by CNBC-TV18 expect a rate cut only in October. The new NDA government will be sworn in on the 9th of June. Sources say allies, the JDU and TDP, want a common minimum program and about 4 cabinet berths each. The BJP is likely to retain the speaker's post. Nitish Kumar's JDU calls for a modification to the controversial Agniveer scheme. KC Tyagi says there is resentment against the recruitment scheme for the armed forces across several states. Opposition parties had promised to scrap the Agniveer scheme if voted to power.
My leader, through M.K. Stalin, will share a very beautiful relationship with through Chandrababu Nadu.
Tamil Nadu Industries Minister and DMK leader TRB Raja says the return of Chandrababu Naidu is great news for cooperative federalism. Adds M.K. Stalin and Naidu share a beautiful relationship and both leaders will work together to ensure South India gets its fair share. Nvidia's market cap crosses $3 trillion, overtakes Apple to become the second most valuable listed company in the world behind Microsoft. The Israeli army attacks a school in Gaza run by the United Nations Relief Agency. Hamas claims 40 people who were sheltering, including 14 children, have been killed. Israel claims Hamas was using the site as a military compound. In a bid to tackle the water crisis in Delhi, the Supreme Court orders Himachal Pradesh to release surplus water and Haryana to facilitate uninterrupted flow, directs the Delhi government to ensure there is no wastage of water. More than 99% of ITC shareholders vote in favor of the hotel business demerger. ITC will hold 40% stake in the new entity and shareholders will hold the remaining 60%. Titan has started selling sunglasses via quick commerce, also plans to sell prescription eyewear online. Management is confident of turning EBIT positive on all emerging businesses by the end of FY27. Well, let's start with the market action. Stock markets continue to recover from the counting day plunge. After a 3% gain yesterday, the Sensex and the Nifty added another percent today. The Nifty, in fact, reclaiming the 22,800 mark. Midcaps have seen a sharper rally. The Midcap index gained over 1,100 points. Prashant is standing by now to wrap up the market action for us. The recovery continues. Prashant, what is the market now factoring in?
Strong gains once again. The market waxing and waning a little bit mid-session because there were two swings But finally, it was a solid close once again, building on the big 3% move that we had yesterday. So, of course, not as large as yesterday, but still very respectable. And, you know, the thing is, it's not just the Nifty, but the broader market, which did very well. The Nifty is up on your screen. The Nifty Bank underperformed a bit, but was still 0.5% after slipping into the red at around 230 or so. But then sort of coming back up, names like SBI, which I'll talk about, gaining. You had mid-caps and small caps, which did far better, 3 and 3.5% gains in that region for those two indices. I'll come to large caps. You had gains coming through in the IT names, which have largely sort of gone unnoticed, but HCL Tech Mahindra were the big Nifty gainers there. SBI Life, Shriram Finance, SBI from the financial services space. There were also gains in iSure, Infosys and Coal India. Some pullbacks in Hindalco, Hero MotoCorp and HUL, so to speak. In the broader market, PSU as a theme is back. I mean, actually, if you wanted to look at sectors, it's real estate, metals, PSUs and IT. You know, the broader gains, there was BHEL, Mazgaon, Cochin Shipyard, which did very well. It's a PSU flavor. KNR Construction, PNC Infra, NCC from the construction space. You had Exide, Uno Minda, Brigade. Uno, of course, had a news flow and the management was with us earlier. Biocon, Century Textiles, Aegis Logistics, Viatech Vabag back at about 1,050 rupees, and Nazara Technologies was up about a solid 15% as well. Very few losers and nothing really which went down on very heavy volume. So another very good session as we get into the last day of this week. It's been an eventful one, and we wrap this up with the RBI policy tomorrow. Back to you.
All right, Prashant. Yes, we are going to be watching the RBI policy very closely. As Prashant pointed out, it is the eve of the RBI monetary policy. All economists polled by CNBC-TV18 expect a status quo. The street is also expecting the RBI to maintain its stance of withdrawal of accommodation. 80% of those polled predict that the first rate cut is likely only by October. Ritu standing by with the highlights of the CNBC-TV18 monetary policy poll. Status quo, nevertheless, take us through some of the other factors that the poll throws up.
This is a bit of a wait and watch policy because it is squeezed in between the Lok Sabha elections that just happened and the budget that is going to be presented in July. But more importantly, with a strong growth print, inflation still above target, and the US Fed also not itching to cut rates, there is no compelling reason for the RBI to move on rates just yet. So this time around, the markets are going to focus on what the central bank says about these two things. The first is liquidity, with systemic liquidity continuing to remain in deficit, and the government's surplus cash balance as the elephant in the room, and on inflation, with that road to the last mile of disinflation taking a tad longer than expected. But that said, no one is expecting any change in the repo rates, so a status quo policy for the 8th consecutive time, and no change in stance either, which is likely to be left at withdrawal of accommodation. Now, none of the economists that we polled expect any change in stance before August, in fact, and the majority expect the first rate cut to only happen in October, some even later. On the macro forecast, the inflation projection is expected to be left unchanged for the year at 4.5%. Keep in mind that while inflation is moderating 4.8% in April, core inflation is providing some comfort to the MPC. The high food prices continue to remain a spot of bother. Now, on the growth front, the numbers are likely to be revised from 7% as per a majority of our respondents to somewhere between 7 to 7.5%. Now, the governor's tone is expected to be absolutely even with no real change from the last time. And finally, to end with what we started with on liquidity, the markets will watch out for any measures that the RBI may introduce later to regulate changes in liquidity from any passive inflows that happen because of index inclusions. And of course, they expect RBI to continue managing liquidity through their main and fine-tuning operations as needed.
Ritu, many thanks. In fact, the CNBC-TV18 Citizens Monetary Policy is also unanimously predicting a status quo tomorrow, as we pointed out. Lata is here with the expectations of the Citizen MPC. Lata.
The first question, given the uncertain backdrop, what will the Reserve Bank's rate action, MPC's rate action be? Can I start with, Sajid?
On a hold.
Okay, hold. Soumya?
Pause.
Pause. Sonal?
Hold.
Hold. Samiran?
Yeah, it's a hold.
Hold. Okay. Dr. Sen, the entire committee is saying no action.
Hold.
Hold, yes, thanks. Let me get to the other one. The stance, any change, Sajid?
No change. Withdrawal of accommodation.
Withdrawal of accommodation. Soumya?
No change.
Sonal?
No change.
Shamiran?
No change.
Okay, this is not all that perfunctory. Dr. Sen, in the past you have said neutral. What's the stance now?
I continue to think no change simply doesn't make sense now. There is no accommodation to withdraw.
Well, you definitely have one voice in the MPC supporting you. Dr. Verma also believes neutral. He has already dissented. Well, just very quickly, when do you all expect the first rate cut? Sajid?
Too many known unknowns, but somewhere in the third or fourth quarter of this year.
Okay, so that will be October onwards. Shaumya?
You are in the third quarter of the current fiscal, so from October.
October. Sonal?
October.
Samiran?
October looks more likely now.
Okay. Dr. Sen, would you agree?
Well, yes and no. I would prefer to wait for the full budget to be presented before one takes a call on it.
And you can catch the entire conversation with the CNBC-TV18 Citizens Monetary Policy Committee. That's tonight at 7:30 and 9:30 p.m. right here on CNBC-TV18. The new NDA coalition government